Good afternoon, everyone. There we go. We're going to kick off in like 30 seconds. If everyone wants to take a seat, get settled. And we're going to start the first panel with our CFD traders for the day. How is everyone today? Oh, don't fucking kill me with your energy. How is everyone? There we go. There we go. Right, we're going to have a good panel to start off with. We're starting off with some trader panels. I want to kick off for anybody that, for any reason, may not know any of our traders. I'm going to put them on the spot and ask them to do just a small little introduction. Tell them your name, tell them a 10-second snippet maybe into your journey, and we'll get underway. Zamko, you want to start?
Oh, yes. My name is Zamko. I've been trading for 9 years now, and I was unprofitable for 6 years. And in the last 2.5 years of profitable trading with prop firms, I've pulled over 1.7 million in payouts.
Yeah, nice to meet you all. My name is Fabio, also known as the Trading Academy on YouTube or TTA Caps on Instagram. Been trading for around 6 to 7 years. Fundamental swing trader, and yeah, mainly trade the 4-hour time frame.
Hello, hello everybody. I'm Kays. I've been documenting my journey from unprofitable in my first year. Got funded, got payouts, and I'm still sharing my journey, still on the battle, but yeah.
My name's Artan. I was actually a rapper before, like 5 years ago. Got into trading, and then now just full-time trading. And yeah, best thing I ever did. So, yeah.
All right, so we are going to kick off. I really want to help you guys to understand the mind of what it takes to become successful in props. These guys collectively, we're talking 7 figures in payouts from the prop space. And I think their experience, their mistakes, their ups, their downs, that's kind of what we want to focus on and learn a little bit more about today. So we'll start off. Maybe we'll start with a little like round robin. We'll start with Zamko. We'll keep this nice and orderly. But maybe we'll get into a few debates a little bit later down the line. First question I have for you guys. If I was to hypothetically take away all of your funding, and you had to start from scratch, what would you do differently today than you guys did on your day one?
I would go for smaller account sizes. So what I was doing was, even with my job getting 2K a month, I would go for 100K, 200K accounts. That means I have less opportunities, because if I fail, that's a very heavy cost. So if I was to scale down to like 10K accounts, then I'll have more opportunities to keep trying and let my edge play out. So I would always scale down and start from there, and play the long game, let it scale and snowball.
Nice. Fabio?
Yeah, so when I started out trading, I always was using around 1% risk, and then when I went to drawdown, I would downscale the risk to, for example, 0.5%. However, what I would have done differently is I would have bought at least, let's say, 2 prop firm accounts at the same time, and then A/B them. So on one side, you have account A, one side, you have account B, use 2% risk. Trade one, you take 2% risk on account A. Then if that either hits SL or TP, you then put that account on the side, and then you trade account B. Then again, you trade with 2% risk on that account. So that if you go through a period of drawdown, the overall downside is very limited, but the upside is maximized. So that's my #1 piece of advice.
Beautiful. Kays?
I think for me, it was just rushing that funded trader title. And I always got accounts. I was not profitable. I never saw consistency. I still bought accounts, continued to buy accounts, continued to fail them. But I think if you guys can focus on actually seeing the results first, whether that's demo, whether that's a small funded account, and then see that you can pass it and you're getting percentage returns, then okay, then go for a prop firm challenge. I think a lot of you guys are going for prop firm challenges when you've not even seen the results in the first place.
Nice. Artan?
Yeah, basically the same. I mean, I actually lost I lost 800K in January, so I didn't really change anything because I've got the data behind me to be like, just like I know my system's profitable, so I can get back. But if I was like at the start of my journey, kind of like Kay said, it's like you need to be able to learn how to play the game first before you can focus on the money. Like there's not really any point in trying to make money when you don't even know if your system is actually profitable yet. So work on that first, and the payouts, the money is inevitable. You just actually need to learn how to play the game first and know what you're doing before anything else.
Yeah, I love that. I'm interested to understand from you guys. You are in a place where there's probably a lot of people, even just here today, that are looking up to the position that you guys are in. What do you think is the biggest misconception about being a profitable funded trader?
I think the biggest misconception is that we are invincible. We don't lose. We just constantly win. I can go for 2 months losing back to back, and that's absolutely normal. That's just part of the process. Having a strategy doesn't mean that you're just going to win every single trade. There's a win rate for a specific reason, and those losing periods do come, and it's absolutely normal. I think you shouldn't beat yourself up if you go on a losing streak, because that's part of the process. I go on losing streaks, even though you see my payouts, you would think I just never lose, I'm just hitting payouts after payouts. But no, I blow a lot of accounts. I've probably blown over 1,000 accounts with prop firms, but that's just part of the process. So I think, yeah, biggest misconception is that we are invincible and we never lose.
Yeah, I would say that sometimes it's not bad to just have absolutely no clue what the market is doing. I think that we as traders are always, or tend to force ourselves to understand where the market is heading next and to identify a potential position. Sometimes when I open the chart, there can be definitely moments where I just have no clue what's going on and price is just not reacting to levels that I like. And then people still expect that there should be always an explanation to give for why price moved from point A to point B. But sometimes if it just doesn't align with your overall perspective or view on the market, it's just not a bad thing to step away and say, look, I just genuinely don't know. And at the end of the day, good conditions, in my opinion, will always come back at some point in time.
Nicely said. Kays?
I think for me, it's just understanding trading is a game of probabilities. You know, I could be winning, I could be up, I could be showing payouts, you could be losing. But when you're winning, I could be losing. And I think when you guys realize that losing is completely normal, blowing accounts is completely normal, as long as you're sticking to your strategy and you're playing your probabilities right, you will see the same results. A lot of the times, you guys are winning just as much as people that you see online. It is just the amount of capital that you have. You could be trading a 5K and they could be trading a 200K, but just know, you know, if you're building and you're focusing on the right things, then guys, it will come.
Yeah, like similar to what everyone was saying, I don't think that over time, you know, you master every single market. Like I sometimes struggle with like consolidations, spotting them early, but like I'm now starting to get comfortable with being unsure. Like, and when I'm unsure, I'm comfortable with that. I'm confident in that. And at the start of your trading journey, everything's unsure. Like you're uncertain about everything. You're trying to like piece together a little puzzle, spot a little, you know, pattern in somewhere, and then whilst you're learning. But as you get, you know, more experience, you just start to understand that like that uncertainty, that not being sure of a, you know, for me, I trade the daily bias, which is bullish, bearish, or unsure. If I'm unsure, I stay out. And like, yeah, over time, I just become way more confident in that. And that's actually allowed me to just, you know, really excel with the positions when I am sure. So yeah, it doesn't get easier about being unsure and just being able to be like, you know what, when I'm unsure, I'm able to pull something out still. It's like, nah, you know what, I'm comfortable with just being unsure, you know?
I think there's a common theme of at least what I'm hearing from all of you guys here, which is I think the perception of what a lot of people see on social media is that the guys that have it mastered, they don't have these bad days or these blow-ups or these failed challenges or moments where they don't know what is going on in the markets. And I think clearly that is something that everyone's going to experience, and we have to kind of normalize in this game. So whilst we're kind of, I guess, on this topic of normalizing the uncertainty of how trading can be, I have always found that trading is kind of like this mountain that has no top. So in your guys' position, from people that have done, again, 6, 7 figures in payouts, what are the biggest challenges that you guys are still facing to date?
I think the biggest challenge that I'm facing at the moment is patience. I think even though I know my strategy works, I know I'm going to get payouts, I still don't wait for my setups. I still have that impatience, and when I do take a loss, I tend to revenge trade. I think that's still something I struggle with, and I don't think I'm ever going to get rid of that. I can do my best to manage it and reduce it, but we are still human at the end of the day, and you're going to have impulses which you are going to give into. But if you just do it less, and you let your edge play out, I guess that still works out. It's just reducing it rather than just enabling it. Reduce it as best as you can, but just know that it's bound to happen. So I think that's what I'm still struggling with.
Nice. Fabio?
Yeah, at times I think it's hard to remain calm, because I think all of us experience those moments that you look at the chart and you just think, this setup can't go wrong. It has everything. You feel fully in sync with the markets. You see it take the price level that you want price to head towards. And in your opinion, the market cannot go to your stop loss. So sometimes keeping it real with myself and understanding, look, I'm getting emotional now, and kind of logging off and yeah, zooming out from that perspective, I think is something that I still struggle with, definitely.
Nice. I'm going to flip this up just to make it spicy. Artan.
That was crazy.
I'm wild.
Yeah, what a flip. Yeah, mine's like my ADHD. So like, I just love to push the big red button like at all times. I want to be in. And like you were saying, like when I'm like, I know where, for example, gold is going today, I'm so certain of it. And then I'm like, oh, okay, well, for example, the liquidity sweep was pre 8 a.m. So like, but it looked really good. My entry model's there. Might as well take it when I could just literally wait that little bit more. So I think over time, I've become more mechanical, more rule-based. So it's cut out a lot of that ADHD impulse. But I think it's something that I'm always going to struggle with. But it's just staying on top of it and making sure that it doesn't affect my edge too much, because I kind of like, I account for it in my data as well. I'm like, look, if I take like 2 trades a month or 3 trades a month that are like, that was outside of your plan and it wasn't too good, that's, like, it's kind of okay. That's the human error, but anything more than that, I don't. But yeah, it's just something that I'm like working on consistently. But yeah, the mechanical nature of my strat definitely helps with that.
Go for
My
it.
turn. I think something that I struggled with, especially this year, was just trusting my strategy. I had payouts in my first year and I got funded in my first year. And then when it came into the new year, I wasn't passing funded accounts and I wasn't making payouts that I expected to be making. And then obviously when you're online, you're seeing other people's results and you're like, oh, you're feeling behind. And I'll be honest, like I did want to switch strategy and I did go to futures when I was initially on Forex because I was seeing a lot more people winning on futures and I'd kind of followed the crowd, but I had to genuinely take a step back and realize I got my first payout from the strategy that I traded before. I got my first funded from the strategy I traded before, and that was Forex. So I really had to take a mental step back from trading, and I think just as the journey as a whole, I think actually this strategy did show me results. It's just, I just had a bad month. I just had a losing month. I just had a no trading month. But the month after, I'm seeing crazy results. I'm seeing crazy payouts, but the whole thing is just knowing that not every time is going to be easy time. Not every trade is going to play out in your favor. Not every month's going to be profitable. Not every trade is going to bang the way that you want it to. And that's normal. That is completely okay. So I think just knowing that what got you in the position where you're at and also knowing what you need to do in order to become profitable, that's just what you have to remember all the time. And just when you're feeling overwhelmed, it's important to take that step back. The markets aren't going anywhere. Remember the long-term goal and just stick to that.
Nicely said. I want to open things up for a little bit in the room and understand where you guys are at. So can I just get a show of hands? How many of you guys have ever attempted a prop firm challenge? Okay, good portion of the room. How many of you guys have failed a prop firm challenge? Same portion of the room. How many of you guys have actually ever got to a funded stage? It's quite a few. How many of you guys have blown funding? How many of you are funded right now? Good portion. Good portion. Okay, nice. So I guess a question that I think is going to be relevant for a good section of this room is, what do you think the biggest mistake that you can make is after you've got funded?
The biggest mistake, I think, when you get funded is people make profit on the accounts. I know a lot of you have made profits on the funded account and then lost it and not got the payout. So what I do is I aim for one good trade. And if that hits TP and your account is up, I leave the account for a payout. I think that the biggest mistake is that they keep trading the account to try and make more. I think that's not what you should be doing. It's just aim to get one good trade, let yourself be paid out. It doesn't matter if you have to wait 2 weeks or even a month. The feeling of getting a payout, it will change something in your head, and it's going to make you want to do it again and again. So the moment you hit profit, leave the account and get that payout. And in the meantime, buy other challenges if you want, just to keep that time going and make use of it.
Yeah, I would say for me, the biggest piece of advice that I could give in that perspective is trade the move and not necessarily the position. And what I mean by that is pretty much everyone in this room understands that price is going to move from, let's say, point A to point B. For example, if we look at, let's say, NASDAQ or whatever, it tends to only trend up. But if you then look at your overall positions, you're trying to long and then short, then long and then short, and then long and then short again. Whilst if you just stick to one larger position by trading from that point A towards point B, one, you limit the amount of positions that you take, and therefore, let's say, the inconsistency in your results. At the same time, you see a lot more stability, and in my opinion, success with that. So that is something, that in that regard, I would like to say.
I think for me, it's genuinely just to stay content. When I got my first funded account, I can't lie, I was very happy. I was gassed, started dreaming about the supercars, the penthouses, the lifestyle. Yeah, no, that just didn't happen after the first firm account. And I think it's natural for us all to think like that because it's such a big thing that we place value on, getting funded and making payouts. But you can't let it take charge of you and don't let it grasp you so much, because I even remember my first funded account and I risked 2%, which was 2K on a 100K account, and I think the TP was around 8K. Guys, I was more than glued to the screen that day, more than glued to the trade that day, because I thought it was going to hit. I thought it was going to bang a crazy payout. What did it do? It hit stop loss. I traded again. Hit stop loss. I traded again. I ended up losing the account because I was too excited. But you remember, what got me funded was being patient, remembering to stick to your strategy, stick to your rules. Don't rush and chase the money, because when you chase the money, that is, I promise you, the biggest setback. Just focus on trading and what you need to do to be a good trader.
Yeah, I think with me, it's I know a lot of my data, so I always think about where I'm at my equity curve. So like, to get funded, you've done a good job. Let's just say, obviously with certain CFDs, it's like 15%. Obviously, like, I don't risk 1% on my challenges. I risk like 2%. Ideally, the max of what I can risk, to be honest with you. But like, when I'm finally funded, it's kind of like I see myself at, like, I'm at an all-time high. So do I want to be buying and trading at all-time high? Not really. I kind of want to wait for a little pullback. So I think about that kind of thing. So what I do is, the second I'm funded, is I'll take out challenges, whether it's the same firm or another firm or whatever, and then I'll trade. So if I lose, for example, a couple trades, it's not a big deal. It's just on a whatever £500, £1,000 that I've spent on the account, versus I would be pissed if I'm on a funded and I've just straight away done it. Because also, like all these guys are saying, that your mentality is you're in the euphoric state. You're like, oh my gosh, I could actually make some money. I wonder how much I could make on this. Really, for me, it's just like, you've done the hard bit, which is get funded now. Let me just I've made a lot in this month. Cool, I didn't make money because it was on the challenge, but let me not get too desperate. I'll just, let myself put in another higher low, and then let me get back to it when there's a really good setup. So yeah, that's what I'd say.
Nicely said. I think maybe our final one for this panel, depending on how long this takes. And again, I want to tailor this a little bit to the room. And I want to talk about maybe an element of prop trading that personally I think is maybe not discussed enough. So there's a lot of you here in the room today that have said you've taken challenges, you've been funded, and today even still funded gets you that kind of one step closer to your goals. So the question I have for the panel is, what stage do you think is harder? Do you think it's the grind in getting to finding consistency, or do you think actually maintaining success is harder? And I want to give this a little bit of context, because a lot of people online, on social media, they'll talk about the struggles that it takes, the years that you maybe have to go through, the blown accounts. That stuff gets a lot of the highlight. There's a lot of traders that do find success, but they struggle to maintain and scale. Maybe they struggle to find fulfillment. Maybe they don't know what to do with their money. There are various challenges on both sides. And I think for a lot of people that are on this journey, they think once they're funded, once they've got a first few payouts, life will just become sunshine and rainbows. And I always hold the belief that there are challenges on either side. What's your guys' take on this?
I completely agree with you. The actual journey is extremely difficult. Yes, it is, because you're trying to figure it out. What works, you don't know, and you keep trying, keep failing. It doesn't feel good. But I've found that I am much more stressed now that I'm consistently profitable than I ever was before. I can't sleep at night. I sleep 2-3 hours a night. Today I slept 3 hours, and that's just normal for me because I'm just waking up stressed. I'm worrying about money. It's, can I get a payout? Okay, I need to keep up this consistency, because the moment that losing period comes, I start doubting my self-worth. Am I even a profitable trader? Even though I have the evidence behind it, I'm still questioning and doubting myself if I go and take a loss, if I go on a losing streak. So it's keeping up that consistency. And because now you have this whole image like, yeah, I'm a consistent trader, now you have to hold that up. And the moments you're losing, you just start doubting everything. So definitely, I think the success part is actually much harder. I'm finding I'm way stressed, way more stressed than I was when I was starting out, even though I failed for 6 years straight.
I definitely think that's a perspective not a lot of people talk about. Fabio, over to you.
Yeah, I mean, I fully agree. I remember when I first started trading from my mom's bedroom, like those were peak times, no stress in the world, filled up fridge. I would go downstairs, make myself a sandwich, go back upstairs and just watch YouTube videos, focus, focus, focus. And now the stress is completely different. I mean, I think a question for everybody here, like who's dreamt about their position once? Like during the night, like dreamt about your position? That's not a lot of people. Well, I can tell you, like, once you're running, let's say, 30 different accounts, 20 different positions, and I mainly trade fundamentals, I wake up in the morning sometimes, and I call my business partner, and I tell him, like, did Iran, like, attack United States? Like I swear, like, I look at the chart, and I look, and I see, hey, your USD hasn't moved. But during my dream, I was like, but it did move. I'm sure it moved. I saw in my dream that I was up, like, 5K. So this is definitely something, and I swear, like, you prefer to have dreams about, was it a trend line or was it range liquidity instead of these kind of dreams, I promise you that. But yeah, that's definitely the stress that comes once you're in that profitable stage. And yeah, also the stress, I mean, to keep performing, to keep getting those results in, because 1 month you can do, let's say, 8% in a month, and then the next month you do -3%. And then you have to stay so strong. And going through that is, yeah, just a different kind of ball game. And you won't be used to that from moment one. It's going to take a lot of time. Because, again, everybody here who is funded has also blown accounts. So it's very unlikely that you're going to keep those funded accounts. So, yeah, that's a little bit more about myself. And I hope it relates to some of you in here.
I think maintaining success is definitely harder than achieving it, because you set a standard for yourself, you know, and let's say you're profitable, you're hitting 5K trades or et cetera, you're setting that standard for yourself. So now when you're not achieving that standard, you're gonna feel it, you're gonna feel frustrated, you're gonna feel stressed, you're gonna feel annoyed at yourself, because your standards are heightening. You expect more from your trading, you expect more from your results. And I do think it is harder, but again, the belief that got you to get that first stage will be the same belief that gets you to the next stage. And I think success as a whole, and as a whole in general, is continuous battles, it's continuous levels. You know, when you're unprofitable, you're facing unprofitable. You're trying to find a strategy, you're trying to stick to that strategy. Then you're getting a payout. Then it's like, when's my next payout going to come? Then you got some funding. Then you're trying to get to the next number. It's always forever growing, and that's just success as a whole. But the people that make it, it's never on accident. You guys have to be equipped to keep growing and keep mentally challenging yourself, because I promise you, it is very challenging. And yeah, I really do think it's harder now than it was before, because you are solely dependent on the belief that it can happen, whereas now it's like, I have made it happen, but why isn't it happening again? But you also need to remember that you did it once, and if you can do it once, you can do it again. So
I'm going to be controversial to everyone here and just say that I disagree. I think that, not disagree, but this is my opinion. Boo! Boo! Get him off! So like in music, for example, like I was doing no streams for like 8 years, grinding super hard, and then on my like 9th year, I ended up blowing up. And then the same thing in in trading. You know, it was like 3 years of unprofitability, and the search to find some sort of wins. Like it wasn't even like I was like having some good months and some bad months, but I was still unprofitable. It was like, bro, I'm talking 36 months straight, L's. Like I don't even know what I can replicate of the good to to try and become profitable. So for me, it was like searching for that little bit of good to then replicate. That for me was like the biggest struggle when I'm like, you know, I'm seeing everyone online doing well or having this strategy that just seems like it works all the time. But for me, I couldn't even get like a 2-win streak. So it was a struggle. And for me in particular, like working a 9 to 5 whilst also doing my music career as well, that was like a time in my life where I was like, and I'm doing this trading thing. It's like, this has to work. So it was like, I don't know, I went through a lot in my like educational stage, basically trying to become profitable. So now I feel no matter where I get to, like Kay's was saying, if you've done it once, you can do it again. But it's like, you need to do it once. Like once you know that you've done it once, same with like when I had my song that blew up, it's like, oh, I know I can do it again. So you just need to find the good in what you did and refine, you know what I'm saying? So yeah, for me, I just felt it was, now at least I know I have the ability to do it. Before, I didn't even know I had the ability. I didn't even I'd know if trading was cut out for me. So yeah.
Nice. Thank you guys so much. We're going to wrap up this panel. Thank you to all of our guests, shared some amazing insights and wisdom. Give them a round of applause. Appreciate you guys. We're going to take probably just 1 or 2 minutes. We're going to get a couple of prop firm CEOs up, and we will continue on with the day. Give us 2 minutes. Thank you, guys.
Gracias.
Okay, guys, we are going to kick off the second panel in 30 seconds or so. If everyone would like to take a seat, and we will get started. I'm good. Thank you so much, man. Okay. Thank you all for sitting back down, waiting patiently while we transitioned over. We have two fresh guests on the stage for us. I think I will allow them to do a very brief introduction as to who they are, what firm they are representing, and then we will kick off today's panel.
Sure, thanks. My name is Bashar Gokul. I'm the director at Handtech Trader.
My name is Murat. I am the founder and the CEO of BAM Funding.
Beautiful. So we have two prop firm CEOs, founders, owners, directors, the people in charge. I want to really tailor this panel to helping you guys to understand kind of what goes on behind the scenes with some props, but as well as giving you guys some insights as to how to really succeed. It's one thing, I think, to hear the insights, the experiences of traders that are the end users and seeing things from one side, but these are the guys that have all the data. They see everything that goes on behind the scenes. They know the challenges, the ups, the downs with running a prop firm, and I think we're going to gain some real unique insights from them in and of itself. I want to start off with a little bit of a broad-based question, because I have seen the prop industry evolve over the last few years, and it continues to change, and as it should do. Where do you guys see the industry going over the next 5 years? What is on the cards for change over the coming 5 years?
So from my perspective, I think one of the most important things that we could see in 5 years is regulation. I think trust in the industry is super, super important. And so introducing regulation at any point would be a really welcome introduction. With the introduction of regulation, what you'll likely see over 5 years essentially is less firms, but perhaps more experienced firms with better balance sheets, better risk processes, smarter pricing. So I think in the next 5 years we could see that, which would really clean up the space and allow the space to really grow.
Nice. Murat?
Like, to be honest, within our industry, 1 day is like sometimes even longer than a month. So guessing what's going to happen after 5 years, it's too unrealistic, but there is some concerns. Recently all the firms start to change their approach, offering different products. It's actually leaving what is accepted in a manner of risk. They are actually discovering what else they can offer to change their approach, lower the entry fee, and by doing that, actually, to be honest, like, the environment is getting rougher for the traders. I really do not like it, but even like the big firms cannot stand against it. So we are, like, our industry is, I think, kind of in a discovery phase again after a long time, and then within the 5 year, everything what we offer will totally change. Besides this compliance and other stuff, so it's quite hard to follow what's going on every day. Everything is changed. Let's see what's going to happen 5 years.
Fair enough. So on the topic of change, let's focus on something which is maybe impacting all of us every single day. I want to talk a little bit about AI, because obviously traders, everyday users, we're all starting to use it in some way, shape, or form. How are you guys, in terms of prop firms, starting to adopt AI? And are there things that traders could be doing with it to help leverage and improve their journey in the space as well?
Well, from an operational perspective, we try and incorporate AI as much as possible. It's a real helpful way to improve our processes, improve our efficiencies, which obviously end up translating to positive outcomes for traders. That's from an internal operational perspective. We're really trying to push more towards AI as we develop. From a trader's perspective, I don't see AI ever replacing, let's say, discretionary trading. I think that would take a lot more time to become the norm. But from, let's say, an unsexy perspective, it's already in use at the moment by traders, journaling and analyzing their behavior. So these are the things that people are already using today and getting the most benefit out of. Being able to use, let's say, an unbiased, methodical, let's say, source to analyze your own behaviors is a really good way of identifying weaknesses and then also come out with improvements to become a better trader over time.
Lovely.
Like, AI is currently in an era of, like, it's like a Google of our era. So everyone can search, can ask, but the question is what they receive in the end. So I think we need a time, kind of. Let's look at take a look to algorithmic trading. It starts in 1970s, and then with the 2000s, it become kind of pop up, and then everything institutionally become like algorithmic trading. All the volumes we see, especially in crypto, they are all like algorithmic trading. So in AI sense, for the traders, I think it will take too much time to take a decision point. But what's going to happen with the AI, what they receive, the information, how they trade, it will totally change. The ones who can leverage that, of course, going to print more. But it's just like, I think, the 5%, to be honest.
Fair enough, fair enough. Before you guys came up, we did a little poll with a lot of the people in the room, and we were figuring out how many of them are already taking challenges, how many of them have failed, have funded, have blown funding, and there was actually a good portion of people here that are embarking on their journey and have actually reached that funded stage. I think one of the things that would be most insightful for either aspiring or traders that are already funded is to understand what would help them to either get there or help them to achieve a certain level of consistency. So from your guys' perspective, where you get access to seeing potentially hundreds of thousands of data points for successful and unsuccessful traders, what patterns do you see that leads to either success or failure that these guys need to be aware of?
So, I mean, I'm going to end up repeating myself or repeating, very typical response that you've probably heard from many other traders. But realistically, the key to consistency is capping downside and not really chasing your upside. It's the really standard stuff that you've all heard before, but never really actually put into practice. So, good risk to return ratios, managing your risk management, making sure that you're not risking too much per trade, not trading during the news or reducing your exposure over the news or over weekends, having a strategy and sticking to it, following psychology. It's all of these things really, and it's nothing you've not all heard before. It's just really about being able to put it into practice and apply it to the challenge and to the funded stage.
Nice.
The thing is that when emotions involve into your strategy, like you basically ruins, because everything has a profitability score. You have a strategy, you have tested years, like not years, let's say 1 month, 2 months, you have track and record. But once you have executed the trade and then you see the floating P&L, if the position is too heavy, it creates you pressure on you. So whenever the emotions evolve into your strategy, it will ruin. I think that this is the one thing why the most traders fails. Yeah.
So it seems to be quite a consistent theme there between both the traders and the CEOs. I don't think that is a coincidence by any means. I want to ask a little bit more about the prop firms themselves. You guys obviously being on the back end, what do you think are the biggest misconceptions that the retail traders have about either the firm or the industry?
So there was a big shift in, let's say, the last 2 years or so from firms saying that we offer real capital funded accounts or real trading, versus now the standard seems to be simulated funds. So we do still get some traders coming to us and asking, are you using simulated funds or real capital? Now, I don't think that's a really important metric or a really important factor to be looking at. The key thing is finding a firm which has, let's say, long-standing operations or a history of payouts, and it has that transparency and trust, throughout, that you find online or through your own research. I think these are really the most important factors to look for and not worry about whether it's the account virtual or real funds. The fact that it's real doesn't mean you're more likely to get your payout. Really, it's all those other factors I mentioned which are the most critical to being able to identify the right firm.
In our database, there's some traders just to treat their accounts to leverage it. Basically, I don't like to use this word, gambling. It sounds so irritating me. But the fact what is separating between the winner and loser, those guys are just literally going all in into every trade and losing account and account and account. The best winner, I mean, the most successful trader in our platform, he had only 4 accounts, and then 4 of them got funded basically because he treated each of them as his unique capital, and then he just treated in that way, and he was using the same account around 9 months, and they got several time payouts. So there's like a mindset difference. You just need to get in that way. If you go on the way, how do you say, like not trade as your own capital, eventually you will sink, basically. Sorry.
Off the back of that, we all know the statistics of how hard it is to become profitable. Do the statistics change at all in the prop firm space? Do you guys have stats to hand on how many of your traders actually get funded and paid?
Yeah, so we look at that a lot. So from, let's say, a challenge to a pass, usually between 10 to 15% of traders. It obviously depends on the type of challenge, the balances, etc. So about 15% pass. Then of that 15% then pass, anywhere between 15% to 40% go and make a payout. Again, it depends on the challenge type you've purchased and the balance. Usually you see increased payouts at the higher end because you have the more experienced traders and slightly lower at the lower scale.
Very interesting.
For our firm, what we offer that each product is aligned with a different trading approach. Like a swing traders, we offer swing account. For day traders, we have more high leverage account. Nowadays, there is not much offer for swing trader. So when you looked at in this room, there's around more than 100 people, and each of them has a different risk approach. So if you put them into the one product, eventually some of them will have some benefits than others. So I cannot tell you that this is the or pace ratio, but what I can tell you that the swing traders is more than 50% more successful than the day traders. If you looked at the future space, it's even low because when you go to lower time frame, there's much more noise and you are getting lost in it. So the ones which getting successful in the environment is actually the ones looking the bigger time frame, not losing in the small time frame, and then not getting lost and stick to their plan, basically.
I think as one final question before we wrap up this panel, I tend to see, and again, I'm speaking about this from the end user perspective, there is often, I would say, like a miscommunication or misrepresentation that firms seem like somewhat predatory, or it's firms against the traders. And actually, the more and more you get to have conversations and insights with the people behind the scenes, you actually start to understand that firms need traders, traders need firms. It's actually a very beautiful and healthy relationship. So I guess the final question I want to throw your guys' way is, if you could give advice to people maybe starting their journey or embarking on their journey about how to become consistent and stay consistent in their job, what was the thing that you would want to tell them?
So I had, two thoughts on this. First, and it sounds really rudimentary and basic, but read the rules. It's really as simple as that. So many traders, and I'm sure Murat will have the same, don't really understand the rules or don't even look to read them. Really, if you're purchasing a challenge and really want to maximize your possibility of getting funded or to pay out, understand the rules. How does the drawdown work? What strategies are prohibited? What does the firm allow? All those kind of things. Once you understand those rules, you can apply it to your trading and give yourself the best chance of being successful. That's the first thing I'd say. Secondly, if you're just starting out, start with a smaller balance. Really treat it and understand that this could be your own capital and trade with that mindset. Trading with a small balance also gives you the opportunity to try a few different challenge types, two-step or one-step, instant funding, etc. So I would definitely recommend doing that as well. And finally, and Murat touched on this earlier, is really don't go in with that gambling or mindset of I'm just using this account to absolutely full margin one way to try and get to payout or funding as quickly as possible. Those are the types of customers that no prop firm really wants, which is why a lot of the rules are focused around restricting that kind of behavior. So really treat this as your own funding and focus on applying your strategy and your principles to going forward in those accounts, basically.
Nicely said.
Thank you. You just covered almost everything. The thing is that, like I mentioned in the beginning of the first question, because we are in the discovery phase, every firm bring different rules, different approach, and they are really hidden in really out of nowhere. even like getting info that it's so impossible. Like maybe you need to use cloud and search me what is there, what rules are there, because otherwise you cannot get it. Really, they really hide it well. So the thing is, the biggest misconception is the judging the product by the price, because you can lower it. You can put there as a risk limit 1% for even the evaluation, and then lower the profit split. This is, as a trader, it's something I would never want to do that. And then it's really also hard to explain a user who is not familiar with the environment. And I can stand behind my product. For example, we bring the feed from the Bybits and the Binance to show the trader something they can rely on. They can open trading with, it will be the same chart. I actually wish you would ask this one as well. Wish the industry would bring actually the pro-firm space, the biggest issue that CFDs are not reliable. The most of the users, after for a while, they are getting tired of trading it because it's not reliable. And the failure of an industry more likely will not come from the rules, etc. We are kind of getting slow to catch the error. Like we need kind of centralized liquidity where everyone can show the same data and everyone can execute without having any doubt. I'm going to have a spread or not. Doesn't matter which broker or liquidity provider you offer. In the end, they all have these issues because someone with the fat finger, they execute heavy order and then the spreads occur. How are you going to explain a newbie user? So as a firm owner, I'm really struggling on this section, but I'm doing my best to explain. And this is, I think, one of the misconceptions that they think we manipulate the environment, but the environment is, and it is what it is. We are doing our best to provide the best. Yeah.
Awesome. It's a very interesting perspective. I always like having these conversations because these are the ones you tend to not see online. It's usually the traders that are getting the spotlights, and hearing things and seeing insights of what's going on behind the scenes is always super, super helpful. We're going to wrap this up. Thank you guys so much. Give them a round of applause, please.
Thank you.
Thank you so much.
We'll be back in just a few minutes. Riz will be gracing you with his presence on the stage very shortly, and you've got an afternoon of fun ahead of you. We'll be back in a few minutes. Thank you.
Can everyone hear me? Is it working? Nice. Well, welcome to 4 hours with Riz. You will be bored by the end, no doubt, but we have an incredible lineup. I'm joking, obviously, but an incredible lineup today. Chart Fanatics Live. I don't know why they chose these chairs, because I'll be lying back, but Chart Fanatics Live, followed by Words of Wisdom Live, followed by a Futures CEO panel to end the day as well. Obviously, this is a prop firm event, so it would only be right. Incredible. It was actually amazing. We're starting with Chart Fanatics. Apex is the stage sponsor, and they've been the sponsor from day one. Thank you to them because they trusted in our vision before anyone else, and we're super grateful for that, as always. The channel wouldn't be possible with everyone involved, from our partners to you guys, most of all, of course, the audience, and then, of course, the traders coming on as well. Talking of which, I thought we would start with raising the bar high. At one point, this guy was a world champion beatboxer. Then he decided to go train under some of the world's best traders, trading champions, no less. And now he's an incredible trader himself and the co-founder of Deep Charts. It's the one and only Andrea Chimi.
Hello. Hello, hello.
We have to stop meeting like this, man.
Yeah.
You never hang out with me outside of the podcast.
Right.
It's crazy.
Hello, traders. Hello, businessmen of the industry. Nice to be here.
Man, I just wanted to kickstart off. 100,000 views on your Chart Fanatics.
Oh.
I know it's not a YouTube play button, which you've already got. It seems to have a deep scratch down it.
It's awesome.
It's not my fault.
It's genuine.
It is.
I love it.
We'll throw that to the side for now.
Thank you very much. Thank you very much, Riz.
But no, we appreciate you. As I said, without you guys, the traders, coming on and providing such value for the community, none of this would be possible. And we're super excited today. We're going to kick straight into it.
Yeah.
We have the whiteboard, right? And
Are they going to see it?
They should see. Well,
Yeah,
when we
right.
get to it, there you go.
Right. Awesome.
We're streaming live right now on Chart Fanatics Live as well, so everyone at home, I can't see your chat,
Right.
so apologies.
Hi to everyone from YouTube as well.
That's it. Starting off, I thought, when it comes to order flow, a lot
Right.
of people can get put off because they feel it's complex. They can feel like maybe it's too much information, when
Yeah.
the reality is a bit different, right?
True. It's absolutely different. But before I get into it, I want to ask to the audience, how many of you guys are traders, and trade, let's say, part-time at least? Can you raise your hand if you trade part-time? Okay. Now, keep your hand high, And how many of you trade with only price action? Okay, that's good. How many of you trade with something close to SMC, liquidity, ICT? Okay.
Too many hands.
There's so many, yeah, awesome. No, this is good, so I know what's the demographics here, because what we're gonna get into today, Riz, is something that a lot of price action traders may not be familiar with, but it's behind every candlestick that you guys see on your chart. A lot of people do not know this, but what moves price chart, the charts that we all take a look at when we day trade, when we swing trade, and we look at these candlestick pattern on the 4-hour time frame, the second time frame, any time frame, is moved by this flow of orders, right? And that's why order flow is such a cool thing, because it shows you what's happening behind the scenes of price action. And this is a concept that, let's say, we started promoting a little bit in the industry, thanks also to your platform. And people are getting more and more into the professional side of understanding the intraday movement of price action. So we're going to talk about something that can be useful both for swing traders, everything that relates to volume, which is the basics of order flow, and also the short-term mechanics for intraday traders. So we'll try to make something that it's useful for everyone over here. And I think we should start from the basics, I guess, right?
Definitely. And to your point, just to follow up with that, a lot of people trade SMC and ICT and a lot of strategies trying to find almost certainty or trying to find the reason behind every move, right? Whether it's liquidity, trying to follow the institutions. From my experience now interviewing such incredible traders, now coming across Andrea, Fabio, and a lot more from your network as well, really the true professionals and trying to find that certainty. Of course, there's never certainty in the markets, but trying to actually understand what's going on. As you said, behind the candles, this is actually the way. And that is so evident from when you see live traders such as Andrea and Fabio, done it both on Chart Fanatics Live as well as doing it within their own community and for free on YouTube also. you never see that level of accuracy and insight and actually understanding. Doesn't mean you're never wrong, doesn't mean you don't lose, but what it means is you understand each move, each time price moving up, moving down. You actually have an understanding of why. And it's such an incredible shift I'm seeing, especially just in my mindset in terms of when I went through those interviews, but equally the shift you're seeing in the industry, which is really, really positive. But like, again, where should we begin from those basics?
Oh, yeah, definitely. So I guess the best point to start is to kind of understand why prices move in financial markets. And what we're going through now is something that is the basics of finance, okay? Because most of us just start from candlestick patterns, we start from drawing lines on a chart, but from the professional side of the industry where they make real money, we could say, and where they win most of the time, they go deeper. They try to understand what's the mechanics behind things, the fundamentals of the market and everything. And what I like to typically start as is how markets move, right? So in every market, you have something called the order book, which is basically, you should imagine this as an auction, right? So you can imagine it as an auction of buy orders below here. It's called the bid, right? And an auction of sell order above the current level of price. This is called the depth of market or the liquidity. This is called the ask, right? And all these things are buy limits and sell limits. So think about it. When you try to buy anything, you have two options fundamentally, right? You either place a buy limit, right, and you wait for price to reach you, and you place a buy offer, then you would be here in the order book, in the bid. That's your small order right there. And then at this point, you just wait for a seller, right, to come to you and accept your buy offer. That's option one. Option two is you buy market, right? So you accept basically any of these sell offers. So you don't wait for a seller to come to you. You go to the seller and pay the spread between the best bid and the best ask, and you basically buy market, okay? And you take that liquidity. That's the difference between being a market taker and a market maker, right? So these are the two fundamental forces that move market. As soon as you guys open a trade in every single market that is centralized, where you're actually in the markets, not CFDs, not prop firm accounts, but in actual markets, like the stock market, where you actually go in the exchange and trade, this is what happens. You actually move price with a small order, just a tick above where it's now. And whenever aggressive buyers like you may keep buying and keep buying and keep basically eating out all of these sell offers, that's how price rises and rises and rises. And if you had to draw the candle, it would look something like this, right? But then you could, someone else could come as a seller, and instead of placing an offer to sell here, he'll just accept whatever offer was here. And maybe another seller will come, they will eat through this liquidity, right? And at that point, the candle will change, will probably be red, and leave a spike above, right? So how candles are created is actually when a market taker, someone that buys or sells market, is matched with one of these passive participants. This is the basic understanding of order flow. And so why do you even care is now the question, right? Because, okay, cool, I got it, but how do I actually use it in my trading? That's a great question. And the most important thing you need to think about is you are typically extremely small in the markets. If you want to buy a Bitcoin, have you ever had a problem buying Bitcoin? Have you ever had a problem buying gold futures or a NASDAQ future or a CFD? Have you ever had any problem filling your orders? Typically not. Maybe you pay a spread, maybe you pay some commission. That's not the same if you're a huge market participant that has to buy 1 million shares. If you have to buy 1 million shares of stocks, 1 million Bitcoins, whatever that is, you cannot just buy, okay? Because you're going to pay so much in slippage because there's not enough liquidity. So you're basically going to split your huge order into multiple small ones. And what a lot of also smart money concept traders try to do is to align themselves with the flow of big money in the markets. So what we do as order flow trader is we take it a step further. We don't just look at the candlesticks because candlesticks are the consequence of this flow of orders. But we actually look at these small fractioned orders that banks, institutions, hedge funds, pension funds, sovereign funds, university endowments, HFTs, ETPs, any form of big market participant is putting in the market bit by bit, okay? And this is widely proven by academic research. There is something called order flow autocorrelation. The more buy orders come, the more will tend to come in the future. So this creates a very predictable rhythm and flow of orders that come in the market every single day that we can look on top of our chart. I'll make an example. And Deep Charts is only one of the platforms that allow you to do it. There's many. This is the one we created and basically brought to the space. So what it does, it takes the order flow from the centralized exchange and it plots it on your candlestick. So you might have, for example, a bullish candle, right? And you just say, okay, buyers were probably winning this battle. Let's say this is a 5-minute candle. And you can say, yes, buyers in this candle, in this time frame, dominated the auction. That's true. But if you add order flow bubbles on top, what you can see, for example, is, and there's some specific charts that do this. I'm going to do this with another one because it seems to be, yeah, now it works. You see this bubble on top. And this bubble means aggressive, right? Aggressive buy, the one we saw before. You should see this as effort. So whenever you see a big bubble like this, it means buyers are putting in effort. But immediately after it, price starts reversing. So this means that there was a huge amount of buying that got absorbed. Okay, this is one of the most important patterns you need to know about order flow. It's called absorption. And whenever you see this, there's some chance, of course you have to find it in the right areas, buy and sell every single bubble, right? But this is a deeper level of, I know that, yes, buyers were very aggressive here because the market went up, but here they're putting a lot of effort and it doesn't have any reward yet, okay? So you need to think in terms of effort versus reward. And this is a deeper layer, right? And this is just the surface, this is just the basics. And this basically allows you to see what big market participants are doing in real time in your candlesticks. So for example, then a big sell candle might come, and it might look something like this. And maybe it will have a big bubble in the center. What does this mean? As we said, this is effort, right? So there's a big sell effort. And right after that, what happened? Was this effort rewarded? Yes, because the candle closed bearish. So this means that this seller is dominating the market. So this is a very small thing you can add on top of your candlestick charts that is simply going to show you when smart money is joining the party. Because these bubbles, also known as deep trades, they basically take all of this huge flow of orders in the market, because there's so many orders every day, there's millions of orders in the market, and it just filters out the big ones. So you can put a filter and say, hey, I just want to see people buying at least 1,000 contracts. I say 1,000 ES contracts. Has anyone here ever opened 1,000 NASDAQ contracts on NQ? Right, right? Awesome. Well, you can filter out who's actually opening these huge contract sizes. And so you can see how smart money is basically creating price movement and align yourself with them. So this is the first step. Should I keep going with where to find these, or how do you want it to
I think so. I'd like to. Does anyone actually trade order flow already in the room?
Oh, we got some.
You converted some people.
Nice, yeah. Nice.
Who's so far? Who's following along and sort of has some insight here?
Yeah. Everyone following along?
Not everyone.
Do we do questions at the end or something?
We'll
see if we have time.
We
right.
could try.
Okay. Then the second step is, okay, how do I actually use this, right? Well, you could draw higher high, higher low, higher high, higher low, the classic good old market structure, right? I'd like to propose something different, because this is just taking the highs and the lows of something that already happened and just basing your assumption on what price has done and the visual reference points of highs and lows. This was invented in the 1850s, though. It's a little bit outdated. So how the professionals in the world, trading champions and hedge fund managers and people that have done multiple 7 figures with trading that I have seen and verified myself that were not on I'm not talking about your classic social media gurus like myself. I'm talking about actual traders from the trenches, people that have a huge professional background. They typically read the markets like they want to see where the money is, okay? And the only money indicator is called volume profile. Not sure you're familiar with it, but it's basically showing you how much trading activity happened at each level of price. So you're going to see these volume profiles all over the place now. And what basically this shows is that a lot of volume was traded here, little volume was traded there, and a big volume was traded here. And typically this looks like this on price action, right? And what you typically have is areas where the forces of the market, these aggressive buyers, passive buyers that we see before, these forces are agreeing on what's a fair valuation of this asset. The price doesn't fluctuate too much. The forces are in balance, right? And then you have the exit from fair value, the so-called price discovery or fair value gap. I know what's fair value. Who knows what's a fair value gap? Someone heard about fair value gaps? Yeah, that's what it is. It's an exit from a situation of fair valuation. And then typically another fair valuation coming up. So you don't want just to look at higher high and higher lows. You want to see it where the ranges are going, okay? Because that's where most of the money from institution is typically traded, okay? So we follow the money like this. We say, hey, volume was here, and then fair value shifted. So I'm bullish. So the next step is I wait for a breakout to fail, and sellers putting a big effort with my bubbles, and this effort having no reward, and buyers instead taking control with one of these bubbles. And that's one of my favorite trading setups. It's the one that I've probably made. I mean, in the episode we shot at Chart Fanatics, I've probably taken 5 or 6 of these setups, and they were all targets. You should go back and see that video. It's really crazy. Of course, there's regimes. So volatility changes, how much this pattern work might be changing through time. But this is just a very simple framework. Follow where the money is going, and then use order flow to really enter and time your trades when you know smart money is on your side.
Because the beauty of this is really, people find themselves when the market has done this expansive move, and they almost feel crippled because they're, the general thesis is wait for that pullback, right? Sometimes people use Fibonacci, I'll wait for the 61.8, wait for that deeper pullback. But in reality, if this move is legitimate and this move is actually powered by a lot of buying power, essentially all those 2 tools, the deep trades and then the volume profile, all it's doing is layering on top of your chart strategy.
Correct.
Right?
Yeah. Also with a lot of these new traders that maybe are familiar with ICT, this is a great thing to put on top. Like you don't need to change your strategy. Actually, if you're an SMC trader, you're already an order flow trader, but you don't know it. Because you're looking at liquidity grabs or order blocks or fair value. Like all this terminology revolves around the idea of resting orders and resting liquidity. Well, there's charts that can show you that liquidity. You don't need to, assume it from a chart. Yeah. You can actually see those orders resting like with a heat map or this kind of stuff with the types of software we have. And this just allows you to get a layer of precision that is absolutely unmatched, in my opinion, for a day trader. Then, of course, it depends on the narrative and everything. I'm not saying that order flow is the new magic thing that's going to make you millions. There's no such thing. But for sure, having a deeper layer of information might be useful, definitely.
Definitely, that's what you see from order flow traders is by having that deeper insight and actually having a lot more confidence behind their trades. More so what happens is, yes, strike rate might improve, but putting that to one side, most of all, the risk management is so much clearer, so much cleaner. And then even your TPs, you can have a lot more faith in. That's how you can start to take profits more smartly, with conviction and insight versus just doing it based on just a candle or the recent low. You actually then start tracking the orders that are coming in. And to your point, obviously, when you see that absorption, you know that that's when the auction is starting to fail. So you can start, you don't have to get the reversal necessarily, but at least you can understand why price may reverse from this area.
Right. So I have to be honest though about something, right? Because I have a conflict of interest here. Because I also sell order flow software, so I want to be straightforward. When you're going to start using order flow, you're never going to be able to come back. Like once you try that, you never go back. You know what I mean? Because like you get used to seeing stuff that before was just unseeable to you, and to go back to normal candlestick is impossible. I tried, and it's like, oh my God, I feel like I'm missing something when I'm just looking at naked candlestick charts. So just know it's a one-way ticket, okay?
How many people in the room trade CFDs? Decent amount. And then how many are trading futures? I think that's in the majority,
Right.
yeah.
Majority
Those who are
futures.
trading CFDs, do you trade futures as well or just CFDs? Just CFDs.
Just CFDs. Yeah, well, in CFDs, this is, you know,
This won't work in CFDs, just so they know, right?
this won't work, actually. If you only trade CFDs, so you operate on a CFD or a futures, a Forex typical broker or prop firm, you can trade there by analyzing the future flow, though. Like you can analyze on the future and execute on CFD if you want, because NASDAQ moves the same as US 500. It's the same thing as just a different symbol, right? But I guess that in your, in your process, in your journey of growth into trading, as maybe you're doing the first steps, adding this extra layer of professional level information can be a game changer. So, yeah.
Definitely.
Do
Well,
try
our
that
next
out.
trader's done exactly what you mentioned. Like they were an ICT trader, didn't have much consistency, and then they transitioned to order flow as a layer, and everything changed for them. Now, if you want to learn this, obviously this is like a small snippet, right? 20 minutes,
Yeah.
25 minutes, but we have a, 4 or 5 hour episode on Chart Fanatics that's on YouTube. It's completely free. Chart Academy just launched on Monday. It's the first all free, entirely free, forever free trading education platform, and Andrea has supplied, a 6-hour masterclass,
Yeah.
all breaking down order flow. And then for those who then want to learn the actual platforms, because that's where I think some of the struggle, the hurdles come in trying to implement order flows. They feel when you visually, a lot of these older platforms, no offense to them, are a bit archaic, right?
Yeah.
They're not necessarily made by traders of today, and so therefore can be a bit daunting.
Yeah.
But full deep charts masterclass as well, breaking down how to use the actual platform, how
Yeah.
to actually understand it. Again,
True, because you do
all
need
for free.
Yeah, definitely. You do need a specialized platform to process this kind of data. So yeah, we've tried to make it as stupid simple as possible for traders to access order flow. So for example, you can you don't have to even set it up by yourself, because typically there's a huge setup process. But here is like you plug and play Fabio's template. It's available for everyone. He's a world trading champion or a top scalper or whatever. And you have all these great traders that have created the workspaces that if you use the deep charts, you can have them for free inside of it. So it's supposed to be making it easy to everyone to access order flow, make order flow great again.
Yeah, that's it. That's it. Well, that wraps us up for this panel. Our next trader is going to be coming up as well. He has over 3 million in payouts so far in his career, $1 million this year alone. But Andrea,
Wow.
we're going to come back for a words of wisdom
Yes,
shortly.
I'll see you later.
And so we'll get into maybe some Q&As at that point, okay? Right, everyone, a round of
Thank you very
applause for
much.
Andrea.
Thank you
Andrea,
very much,
look,
Riz. Oh, thank you very much. Thank you, guys.
Oh, man. Oh. Oh, you got the next one, yeah? Okay, guys. Well, our next trader is O'Connor. Okay. Correction, perhaps. Our next trader actually has 5 million in payouts, if I'm not mistaken. Yeah? Well, moving away from order flow, we'll be back with order flow for our last session, but the next trader actually has made $5 million in payouts. He's one of the most paid prop firm traders out there. Slightly unknown to me before we did Chart Fanatics, Words of Wisdom, we did a prop firm roundtable, phenomenal guy. And he's done all of that, 5 million in payouts, trading from his phone, right? Which is absolutely insane, still blows my mind to today. So let's find out how he does it. It's the one and only Okala. Oh, man. I nearly got confused. I thought it was Yosh already for some reason. Sorry about that. Well, I said you have your own as well.
Wow.
100,000 views on Chart Fanatics for your episode.
Awesome.
But we'll leave that to one side. We'll go straight into it. As I said, like very unique style of trading. Now we're talking scalping, right? We're talking from your phone as well, right? Talk us through that. Like, what was the mindset from trading from your phone? Like, that is almost, one of the golden rules, if you will, that everyone tries to say is you can't trade from your phone. You have to have all the screens. You have to see all the data. You can't be profitable unless you do that. But then there's you.
Yeah, you know what? It comes out of necessity. So when I graduated from high school, I graduated with all D's. You know, I didn't have a lot of university prospects, so I went into construction and followed my dad's footsteps to be an electrician. But on the site, you know, you don't have a computer, you don't have anything, you just have a phone. You know, so that's kind of how I adapted. And I was listening to the previous guest, the deep charts, and what I noticed is, you know, that strategy works for people who can look deeper into the chart. Yeah. But for me personally, I had to develop something that I can look at it, execute right away. So for me, I use candlesticks, candlestick charts and patterns and levels. So I primarily trade the NASDAQ contract and sometimes metals, but really it's all based on structure, right? So, you know, with the room today, I'll probably go over 4 of my key basic setups that can identify, you know, market participation, market structure, and just at a glance, you can kind of identify a setup that'll give you those, you know, 15, 20, 25, you know, whatever points.
Perfect.
So the first one I want to really go over is the fork setup. And we've been, you know, kind of in a permanent bull market. So, you know, this setup is the one that's going to present itself the most right now in this current regime, I would say. So on open, you know, usually what you'll see is you'll have trending Asia market, London market. You'll go up, right? You'll go. This green one doesn't work.
It's poor. My team has failed me.
Just pretend that these are green bars, right? You have a trending market. And then usually on New York Open, you'll have some kind of correction, right? You'll have a correction. You'll break these highs, you'll go a little higher, and then you have a correction, right? You'll have a correction. But overall, it's still a bullish market. So the setup that I really enjoyed, that I noticed over a long period of time and that I kind of perfected is, so once this happens, once you have this correction and then you have a sharp sell-off, so pretend this is your New York Open, you know, you have that sharp sell-off, right? You have that big bar, and then you make this low. So pretend there's a wick here, you know, and the next candle opens. So I use a 10-minute chart, right? 10-minute.
Why 10 minutes? Any reason? Or?
It was faster than a 15-minute, so I started with a 15. And then to break this down, to break this 10-minute chart down into 3 equal parts, you know, a lot of you guys, how many of you guys trade a 15-minute chart? And how many of you guys trade a 5-minute chart to break that 15 down? Right, a lot.
How many are trading from the 1 minute?
Oh boy.
I knew that was going to happen. That's why.
There's edge everywhere, right? You can use edge on any time frame, but really what I like to do is have a structured setup where you have a bigger time frame. So for me, it would be a 10-minute, right? And then you break it down into thirds. What's a third of a 10-minute? Well, a third of a 10-minute, you can't use a 3, right? Because then you're missing a minute every, you know, three candles. What I use is a 200-second chart. So I use a 200-second chart. Not every platform offers this. Deep Charts does, but not every platform offers this, but that's what I use. So anyway, back to the fork. So you have this sell-off, right? You made a low, a capitulatory low, right? And the next candle, you have something like this. You have an open, it breaks this low, and then it comes back up. So you broke this previous low, then you come back up, and you kind of put this hammer, I guess you could call it, right? The next sequence of events, this is the important part, right? You have the sharp sell-off, you have this lower low. This is the next sequence that puts everything into play, right? So you have this low, lower low, and this is the fork part. So this candle is important, but this is the most important. I call this the initiation candle. So pretend this is your green marker, right? You have an attempt at breaking this low, but you don't. What just happened? You had a capitulatory low, you had a lower low that took out those buy stops, right? You have continuation, and then this third candle had an attempt, right? An attempt at continuation, but you couldn't. Sellers could not continue, right? So at this point, when you see this, when you see exactly this 3-bar play, okay, this is where you join the bid. You put your stop below this low. You have your first TP at whatever. I use 15 points as my first TP. I put it, usually, you know, I'll have a 10-point stop. If this allows me a 10-point stop, I'll put a 10-point stop. Otherwise, my stop is below this low. And then you let this run. Usually what ends up happening is you squeeze out these sellers up till, you know, the New York Open, maybe even higher, right? This is going to be your bread and butter setup for reversals when you can't have, you know, the order flow that tells you a bunch of orders were absorbed here, right? This kind of visualizes that. Okay, so that's my fork setup. It's kind of my bread and butter. It's really the one that makes me the most money. Because we're in a bullish market, this is the one that makes me a lot of cash.
With this, in terms of the speed, because we are talking scalping here.
Right, it is all scalping.
So when adapting to that sort of speed, are there any sort of key things that you have to sort of overcome or get used to or try and create rules around?
Yeah, so that's kind of where your edge comes into play, right? This is all execution. Okay, you can't be scared that, oh, what if this low breaks? What happens? You know, you just have to execute, put your stop where it is. Nobody knows the outcome of the next trade. I don't know it, you don't know it, you guys don't know the outcome of your next trade. The only outcome, the only thing that you can control is your stop. That's it. That's all you can control. So for me, I'm executing here no matter what. I'm putting my stop here no matter what. And wherever the market goes, maybe this does fail and continues lower. Well, that's what my stop is for. Okay? But otherwise, I'm riding this. Because this is, no matter what, you know, I have seen this play out multiple times. You guys have your own setups that you've seen play out multiple times. And you know that they play out, so that's why you trade them. If you skip out on every single, you know, other one, you're going to be a losing trader because you're not executing your edge. Okay? So that's my fork setup.
Yeah. And the element of 80-20, right? That's what you're famous for as well. So like, do you layer that? This entry has to be along a particular key level?
Yes, I kind of wanted to get into that a little later,
No, I'm
Riz,
sorry.
but
Thank
you.
Ruin the surprise.
NASDAQ, you know, really the system is called 80-20 because if you open up your NASDAQ chart and you know, this is over years and years and years just watching and watching and watching, the NASDAQ will, you know, even without these setups, the NASDAQ will bounce off of 80 and will bounce off of 20. Let's say it's going up to, this is 80 right here, right? This is the NASDAQ, let's say it's trading at 30,080. A lot of the times, it just reverses there, right? And so if you take that into consideration, this is where the levels come into play. So you have 80, you have 20, that's kind of your bread and butter, right? Then you have other levels beside that I've, you know, that I've seen over time. And they coincide with the QQQ strikes and the options chain. But anyway, that's a whole other segment. But you know, if this reverses off of 80, and let's say this fork happens at 30,020, you just have a separate confluence that lets you take that trade with more confidence. Okay, so that's you know, another part of the whole system is you have your structure, right? Market structure is the same no matter what, gold, silver, NASDAQ, ES, it's all the same because these sellers got trapped here at the bottom. Yeah. That's all always going to be the same. But then, you know, you have something specific to NASDAQ, which is 80-20. You know, and that's the first, you know, the first kind of piece to the puzzle. So this is your fork setup, this is your bullish reversal, I guess you could say. It can also be taken in reverse, and in reverse, what you'll see is it would move like this, right? So you have your sell-off, and let's say this is a trending bearish market, right? On the day, because you know obviously we've been bullish forever, but this is your last Thursday, for example. So you have your sell-off off the open. You know, you did a breakdown from the consolidation, and then you have this move down. Well, you want to join into this trend. How do you do it? This is how you do it, and this is called the H setup, right? This is your H. Why is it called an H setup? Because it looks like a lowercase h, okay? So you'll have this first, kind of the mast of the H, right? And then you'll have kind of a capitulatory low, and then you'll start to do this reversal, right? So pretend this is your your bullish candles. You'll start doing this reversal, right? And maybe this is, some kind of trend change, right? But if you're trying to play into the trend, and the trend is on the day is down, right? What you want to see is something to happen like this. This is your H. You'll have a higher high made right here. You'll have a higher high, but then again, you'll have something like this, right? You had your capitulatory high, then you put that reverse hammer in. This is your first sign to start looking for an H setup, a continuation of the trend. Then you'll have something like this, okay? Kind of like a reverse fork, I should say, right? You'll have something like this. You couldn't break this high. I'm not entering here yet, because what can happen is, on the next candle, you'll have maybe a slightly lower low, and then you'll start building this out, right? You'll start building that out, and then you have the full reversal. For me, what I want to see for an H is something like this. You have a failure to break this high. You have a failure. You have another failure. You broke, these two candles that continued up, right? So you broke below them. What I want to see to enter on the H, right, with a 10-point stop, or if you want, you can run a stop above, this high. What I want to see is this candle, this next candle, to go back up, test the cross section between these two, right? So this is where your sellers pushed. Again, you don't, you're just basing it off of a candlestick, right? You don't have this extra information. This is at a glance, right? So what is this area right here? What does it present? Okay, what does the cross section between these two candles present? What it presents is this is the highest point, at a glance, where sellers were able to push price down. So this is where they would reload their short orders. Does that make sense? So this is where your highest probability of a continuation, right, a retest and continuation of this trend down, this would be your entry right here. Entry into the H. And this is you're combining two concepts here. You're combining the concept of the H setup, which is your bearish continuation, and you're combining the concept of a cross-section entry short. This could be taken the opposite way for a cross-section entry long. You take the two, you take the cross-section between where buyers were able to push past consolidation, right? You're kind of like a break and retest, right? Does that make more sense? A break and retest. So that would be your H setup, and you would trail it, you would trail it candle by candle. You would take your first TP, and usually what ends up happening is this H, if it's a trending day, this will break these lows and continue on for like 100, 200 points down on the NASDAQ. So that's my that's my entry short for markets that are moving down. So those are my two kind of trending setups, I should say.
Well, what's interesting with that is after just looking at the order flow side of things, at the end of the day, even if you're not using order flow, the thesis of any strategy is to understand what's going on between buyers and sellers. Even just using candlesticks, as shown there, looking at the fork setup, once that low is put in, you're understanding that the next candle tried to push price down and failed to do so, which is almost, again, to your point, showing that absorption, but you don't need to go to that deeper level necessarily.
All day trading really is, at the core, all day trading is, you're not swing trading, day trading is finding where the most amount of pain is being conducted, where the most amount of trap participation is conducted. and then you are capitalizing on their orders being taken out, their stops being taken out. That's all day trading for me personally is.
Well, hey, you've done 5 million in payouts, so it's working. And
More than
not
that
only
now.
that, though, but you've also had people who've studied this and have learnt this from you. And I've seen one in particular, for example, who's done over $1 million herself, which is incredible to see. Like, what have you seen in terms of that implementation of this strategy, where people may have seen hurdles? So if anyone here, goes and watches, say, your Chart Fanatics or re-watches this live stream, and they want to learn a bit more, like when it comes to them implementing, are there things they should look out for or be wary of so that they can maybe try and make as less mistakes as possible?
The biggest thing would be, you know what? I see it time and time again. This is the hardest, the hardest part is knowing kind of when to press the button. So this is your fork setup, right? Knowing when to press, this button right here, when to join the bid. Like not being scared to jump into that trade. That is the biggest issue. And that is why I run a 10-point stop. For me personally, the fork will sometimes go to 20 or at most 30 points. Yeah. But, the upside to that is you're able to capture this whole squeeze higher. That is the most difficult part for people to kind of understand is if you're not in the trade, you didn't execute. Our job as traders is to execute the trade. That is the job of a trader, right? Is to execute the trade and then manage the trade as it's going. So if you're too worried that, oh no, I'm going to get stopped out, this is not the right path for you, right? You can't be scared of losing money, and I'm sure a lot of people here, have been through the ringer, and the biggest opponent for yourself is you, right? You being scared to execute. So that would be the answer to your question is being too worried to execute instead of executing and then managing from there.
So who else has any problem in terms of executing their trades? Does anyone ever hesitate when it comes to the entry side of things? A couple? Not many. I think he actually trained your way as well.
Oh,
he was
there
talking
you
to me
go.
outside.
Yeah,
he was talking to me outside.
That's right.
That's the thing. Like a lot of people said they scalp, right? Well, at least they're trading from the 1 minute, so I assume you're scalping. And therefore, with scalping, there comes that level of speed, that level of sort of effectiveness of making sure you react on time. And especially as you can see with a strategy like this, but scalping in general, that hesitation of entry can cost you so much when it comes to your RR and can almost change the edge, right?
Absolutely, absolutely. What's the difference between being able, so you're running a 10-point stop or in some cases 15. What's the difference between executing right here and executing here? Well, the difference is if this fails, if you fail on this attempt, right, you didn't take your take profit, and this ends up going back down, well, your stop from here to here is a difference of 30 points or more. Mm-hmm. So you just took that much more heat instead of just executing here and watching that trade play out.
Do you have rules for a number of trades that you'll take in a day, or even if you're successful, let's say you've had 2 or 3 winners, is there a cap that you have on either side, losses or wins?
I don't personally. If you're trading your own live capital, obviously this is a prop firm event, so there's consistency rules and there's payout caps, and there's not a lot of incentive to really let huge winners run. Mm-hmm. But when you're trading your own live money and you have a huge day, an outlier day, I should say, right? At that point, you should have a give back rule because you don't want to give everything back. Because there's a feeling of euphoria, right? When you get from confident to euphoric, you start putting on more size, and then you will lose. I mean, nobody's a winner forever. So you will lose. At that point, you have to kind of manage, instead of managing the trade, you have to manage yourself. Mm-hmm. So for me personally, if I'm trading my live capital, I don't want to give more than 33% of my day back.
Okay.
So let's say it's a $60,000 or $70,000 day. I don't want to give 30% of that or more back. Mm-hmm. At that point, if I do, I'm taking the winning day and I'm stopping. On prop firms, for newer traders, I try to emphasize the fact that you don't really have a million setups in a day. So try to, pretend you have at most 3, right? You have 3 setups, so pick them wisely. Pick them wisely. Once you get better, once you have executed more and more and more, you can take more and more trades because scalping lets you operate at it's not a 4-hour time frame, right? It's you're scalping the price action as it forms.
And final question for you, in terms of time windows, is there a time window that you specifically focus on, or are you trading sort of open?
So it's funny you should say that. Right now we've been kind of having volatility every single minute of the session from open to close. But in general, what I trade is the New York Open, right? That's where you have the most volatility. It's the New York Open because you need volatility as a trader. And then I trade the New York Close, the last hour of New York Close, right? That's going to be your kind of prime time windows, I should say. But right now, the most important part is that you have volatility. You don't want to get lost in this type of move where it's just up, down, up, down, up, down, and you're taking entries and you're just getting stopped out over and over again. But that's what I would say is a good kind of base is trade the New York Open. Maybe wait 15 minutes for some structure to form, right? 15 minutes is enough structure on the 200-second chart for you to start, operating on structure. And then by New York close, you'll have a lot more structure to take trades based off of that.
Definitely. Well, I'm excited to dive deeper in terms of your process, how you've scaled your capital, done the consistent payouts, gotten to the level that you have. Obviously, on our live Words of Wisdom shortly, in about an hour's time. But thank you, Akala.
Thank you so much, Riz. Thank you, guys.
Round of applause, everyone, for Akala. Oh, don't forget your fake.
Oh, thank you.
Thank you.
Thanks, Riz.
No problem. Oh, well, again, with Akala, he has done a live trading and full breakdown of this strategy on Chart Fanatics, and we'll also have a Chart Academy segment soon, a full masterclass also. But moving on, the trader I nearly announced before Akala. But we have, again, another incredible prop firm trader, someone who is super transparent. At the beginning of this year was at 2 million plus in payouts, now at 3 million in payouts. Just in 2026 alone, so the last 6 months, has done $1 million across his live accounts with props, as well as his personal live account as well. So he trades both live and prop firms. And not only that, he, as I mentioned earlier, he was once an ICT trader, didn't find consistency with that, and has transitioned since to being an order flow trader. And so we'll probably hear today, I imagine, and I won't speak for him, but how you can combine the two. So without further ado, it's the one and only trader Yush. I didn't know if you would turn up then. Man,
That's good.
it's great to have you with us. Thank you. No problem. We'll be ready for this. Again, I'll show you quickly, but 100,000 views on your Chart Fanatics episode. You're going to have to carry this around London later, so I apologize in advance. But where should we begin? As mentioned, you were once an ICT trader, so price action-based trader, and that you didn't find consistency there?
So the issue was more so the confirmation factor. It's like, okay, I have a fair value gap. Why does a fair value gap have to hold? And then what's the difference between a fair value gap and an inverse fair value gap? Like, people say if a fair value gap doesn't hold, it's an inverse fair value gap. What the heck? What the F is that shit?
It just changes.
No hate, by the way. No hate. It didn't work for me. I found consistency in learning order flow, and it took time, right? But it was just putting in the reps, watching market price action in real time, and seeing the orders coming in. And after a few months, I found consistency, and now I'm able to trade, like a lot of my trades when I'm trading live. I'm getting very little drawdown. It's called MAE. It's like how much drawdown you get into once you're in a position. And in order to be profitable, stay consistent in prop firms, because you have a limited amount of drawdown, that's what traders should focus on. Forget about the RR, win rate. Focus on when you enter, execute, how much are you going in drawdown from that entry point, right?
Yeah.
So that's been my priority. That's what I've been doing on my personal account and when I trade props, and it's why I'm able to make all these payouts, even with limited amount of drawdowns.
And would you say that's helped your psychological aspect as well by limiting the drawdowns?
Yeah.
And having a focus on that, you're spending less time in drawdown, which usually is what leads to those tilt moments or those revenge trades.
Well, the big thing has been, I have all this data now to see if I'm really patient and really just cap myself at like 2-3 trades, really good trades that will show up with my strategy. I can really stay patient and not force anything. Because I know with my strategy, I will at least get 2 or 3 trades in a day. And we'll talk more about that here shortly. And obviously, plug here, Chart Fanatics episode here.
Well, let's go into it. So in terms of visually looking at, going from a price action trader, like what is it about order flow, or where within the price do you look for those orders?
It's a great start. So obviously, if you just start with order flow, you could look for absorption at any point in the market, right? You can see absorption at any point. You need some sort of structure to kind of see, okay, this is where I want to look for it. That's where volume profile comes in for me. So we could start off right here. So first, I want to kind of start off. I only trade one session. I only trade New York, and for ES&Q, because majority of the volume is in ES&Q. And the reason for that is, shockingly, a lot of people that trade futures don't know what's underneath NQ and ES. S&P, right, ES is 500 of the most, I guess, biggest companies in the US equity space. And NASDAQ is the 100, like, I guess, the highest growth stocks or healthcare companies in there, right? A lot of the traders I talk to in the community don't know what underlining they are. They're like, why don't you trade Asia? I'm like, I'm looking for the highest return and the quickest amount of time. I don't want to be stuck at my desk trading. I trade here for freedom, right? I want to travel the world. I want to be in and out within an hour, 2 hours. And in New York, I can get the speed, the momentum, and the range to just make money and just enjoy life.
So like almost trading when the probabilities are the highest.
Yes. Yeah. All right. So what do we want to start with? So how do you get that structure, right? So there's 3 different, I guess, environments a market moves. So one, you have, okay, this one doesn't work.
Give me that one.
Great start. Good. By the way,
get rid of it over there.
By the way, I was at dinner with Riz, remember?
Yesterday, yeah.
After this, just follow this, 6 months.
I'll pay for
You're
that
not
bill.
going to be here. No, you're not going to be here. You're going to be retired, enjoying.
I don't think I'm allowed to retire. That's the problem.
All right. So, one, we have balanced markets. A lot of people think when markets are in balance, you can't trade. But if there's good range, like with NASDAQ in New York, in a balanced market, you'll get maybe like a 100-point range, 120-point range. Even if you can get half of that, that's decent profit. You can get 40, 60 points. That's decent, right? You're good. That's even like with one contract, right? That's like $1,000, right? So in this market, what I look for is mean reversion setups. Oops, sorry about that, man. Mean reversion setups. So what that means is, I'm just going to draw here. So when you look at a volume profile, a lot of people ask me, where do I kind of start? How do I anchor the profile? I only use the RTH profile and how it's developing. So normally, when you have a balanced profile, you'll see a volume bell curve like this, where majority of the volume, value area high and value area low, which is 70% edges, those are the extreme points of where majority of the volume has traded. So you'll get, on a balanced day, you'll get, it won't be perfectly like this, right? But it'll look similar. It'll have a similar look to this. So when you get a profile like this, you know clearly no one's in control. Buyers and sellers are accepting price in a certain range, and no one wants to take prices higher or lower. So a lot of people think this is not tradable, right? Yes, this part is not tradable because you're in the middle. It'll be really choppy. But if you just are patient and waiting for the edges of the range, like something like this, you see what is happening on this. And if you get a reclaim, we talked about this is model 1, right? I call this the look below and fail setup. If you get a reclaim, this could be a potential long entry. Target the midpoint, which is likely your POC, volume point of control, where most volume is traded. And then the other side is your TP2. Right, so this is just a structure, balanced profile structure. So when you have a profile that's looking like this, I'm looking for the edges setup. So trading the extreme points and looking to take it to the other side of balance. And now where the order flow comes in is at the edges for the confirmation. Am I seeing a lot of selling coming in, selling momentum, a lot of orders at the bid hitting in price, having that follow through down, or we can see buys coming in, but there is no momentum or that passive liquidity getting filled, but the selling is so strong, even with that passive liquidity, the momentum continues down. That's a setup that shows me there's momentum. I don't want to just cake, even though it's at the edge of this extreme point, value area low, I don't want to short it yet. What I want to do is just see how it reacts, and if momentum stalls and then buying immediately comes in really quickly, we could be trapping all this selling here that we saw on the order book. And this is where I would look to enter when it reclaims.
So essentially, what you're seeing here usually will be a sort of choppy day, right?
Yeah.
But the volume's primarily in the middle.
Yeah.
When you get to those edges, you're essentially saying that when price tries to break down aggressively,
Yeah.
you want to see the aggressiveness. So
Yeah.
it can't like just be trickling away. You want to see that aggressiveness, which would probably show up in those deep charts or the bubbles on the charts that people see like this. And you want to see it fail, essentially stopping in its tracks.
Yeah.
And then seeing that. When you comes to the entry side, are you looking essentially once you've reclaimed and you're back inside the range?
So what I would do, if I'm looking for aggressive entry, I'll size down, I'll add here, and then I'll average up. We talked about it, right? A lot of people average down. That's a losing mentality. I'm sorry. That's how you blow up. You should be adding into your winners. This is the aggressive entry. This is a safer entry when it reclaims. So you can add here, just size down. You have a tight stop. You probably get a greater risk reward if you add here versus here. But this is a safer entry here where you could get a bigger drawdown here versus here.
And so from here, as you said, the first take profit, because if you understand, each strategy tells a story. So you have to follow that story accordingly. So in this case, the story is saying the overall market for this day, the profile, is that we're in a range. As you said, the buyers and sellers are almost in agreement. There isn't anyone who's dominating that particular market on that particular day. So the story is that when we get to the edge, what's going to happen? Is anyone going to take over? So in this case, the sellers tried to, but failed, meaning the buyers are back in. So the story, if you will, in terms of why you then target your point of control is that's the mid-range, right? The medium.
So you don't even need me, bro. You got this. You got this. You're learning.
Been doing this a long time. But that's why then I'm guessing TP2 is the high of the range in case price does get there, which is likely. And again, similar story. I guess in some cases, if you're lucky, you might then get another trade on the opposite side.
Exactly. So one thing else I want to add is a lot of people think we go up or down because of the pressure on that side.
Yeah.
It's also the other side. When you have traps selling and when they have to cover, that's buy side activity that creates more momentum. So it's a mix of new buyers coming in at the extreme point and those sellers that got trapped having to cover, which forces them to buy back those lots, right? So that's
why you see that aggressiveness.
You see that aggression. And that's, I heard Okala say it, right? But you can actually see it in the book happening where they're getting trapped. And it adds even more conviction. That's where I feel really confident in my streams. I get really excited. I'm like, we're gonna squeeze this. We're gonna squeeze this bad boy up.
How do you control like being able to visually see the orders and have a deeper understanding and not allowing yourself to almost get overconfident in what you're seeing?
Yeah. So I have like a fixed risk parameter. I don't oversize too much. I'm very happy with how much I make. I don't ever think about, okay, I want to scale this to like 2-3 million. I'm consistently doing 6 figures monthly. I'm happy with that. There's a lot of ways to make money. I can take that like 100K, invest into real estate, whatever, right? But I feel like if I press too much, add more size, it's more more stress, right? Mental stress, right? And I don't think I'll ever get to that point. I'm happy making 100K.
Did you ever try to push? And then sort of realize that stress and brought it back down?
I tried when I was trading options. So when I was trading US equities, I tried to push. I had a huge 300K day, and I was like, I want to make $1 million next week. And we talked about this, so what happened, right? So that was a good lesson. I just want to be consistent, and I don't want to get too greedy, right? Because this is so hard. You're living with uncertainty every day when you're trading, and I'm making more than I was making at my job in a year and a month. Every month. Why get so greedy to scale it? Be happy with what you have. As long as you can provide for your family, that's what's more important, right? And there's a lot of ways to make money. You can take trading is a great active income source. Obviously, you want to scale it, but then there's also that risk as you get older. If you have kids, right? There's other factors outside of trading you got to consider. And at this point in my life, my wife's like, all right, maybe we'll have kids in a few years, right? Start planning for kids. So I'm like, do I really want to try to scale this to 3 million? That would require me putting on more lots, more size, right? Also, I would have to have bigger risk parameters, right? Like loss limits. And to me, I'm really happy with where I'm at right now. And why would I need to scale? Like honestly, if I'm satisfied making 100, 200K a monthly, that's like more than anywhere, majority of the careers,
It's true.
right?
No, it's true. And you know, as to your point, like you can make trading work in so many various ways. Already we've seen, yes, 2 order flow strategies, but 2 different order flow strategies. Then we've seen a strategy that is pure scalping, no order flow, pure price action, and yet the results for each trader is there. In terms of this though, like, is there certain conditions where you see this fail, like not work out? Or is the case because you wait for not only the sellers to come in and you're seeing the order flow,
Yeah.
and then you need to see it reverse and I'm guessing have quite an aggression and see the buyers, does it allow you to sort of have a stronger strike rate and maybe not get what people say like tricked out of the market?
Yeah. So obviously this won't work in a trending market because you'll have a really strong trend. We can quickly go over that as well. Yeah. On those days, a lot of ICT call it fair value gaps, right?
And we talked about this earlier, yeah.
Right? You'll see a lot of fair value gaps forming on trending days. So this is number 2. Trending markets. So back to the point, right? So markets are either going to be in consolidation, choppy phase, or they're going to be trending, either up or down. So those are the 2 phases the markets move. Majority of the time, they stay in balance, and then you'll have like a few days where there's aggressive trends to push it out where one side takes over. So on this days, you have a profile where we have value established for like maybe hour, 30 minutes in here, and then you get a strong breakout, and this is where, you know, ICT traders will call this a fair value gap somewhere in between. There'll be low volume nodes, but there's no issues with that, right? But not every fair value gap is a low volume node. That's what I try to tell like ICT traders. This is great, right? Use this, but see if there's also, add the volume profile to see if there's also low volume nodes in that area. It'll add good confluence.
Yeah.
And it's not even that hard, right? You just anchor the profile from New York Open to see if there was strong demand that came in, for example, on a profile like this from the buyers, like strong impulsive leg, to see, so you have that confluence there, right? So usually what you want to see on a trending day is you get a breakout after some sort of consolidation that shows there was accumulation right here. Yeah. And then you start to see like a consolidation, a compression pattern, but I don't want to add here. I don't really see good RR in here. I want to see some sellers potentially get trapped or a deeper pullback into those low volume nodes here and some activity like big trades coming in, either buys coming in, protecting to form a higher low somewhere in this low volume pocket that we have. If you have a big low volume pocket, I usually am looking at previous day, if there was previous day high, previous week high, or I call them market generated levels because they're organically formed. And a lot of positioning happenings there. Institutions position based on previous day highs and lows as well. So I'll use that as confluence if they are in the low volume pocket. So I'll look for big trades or some selling to get aggressive because you also see this, right? A lot of people be like, okay, now I missed this trend up. Let me see if I can catch the move that way down. But they don't realize this is a strong trend up.
Yeah.
You have very little volume trading, and buyers can start to really step back in, trap sellers, and push price back up. So I'll look for an entry somewhere here. Again, aggressive entry, or you can look for where, if there's volume cluster building out here, where it's consolidating, where you try to break down, entry when it reclaims this new volume cluster is building. And look for new highs and look for a bigger squeeze higher. So I would scale at the highs and then trail my stop loss to green and keep trailing it.
You keep trailing until it hits.
Yeah.
But the beauty of this is, as you say, even if you don't trade order flow, you know, in terms of the big trades or anything, if you just trade fair value gaps or that's part of your strategy, just layering a volume profile, which is literally just putting it from New York Open to current price and seeing if that low volume node, so essentially just if there's pockets of volume at the low, pockets of volume at the high, and there's a gap in between, that's your low volume node, that's your essentially showing you there's a lack of orders in that area. And if your fair value gap aligns with that, now you have confirmation. Now you actually can trust that this is an actual valid fair value gap. And that's the difference, because a lot of people will use price action, no problem at all, but then they won't have that deeper insight, and it's just one layer, it's just one tool in this case. Just one tool can allow you to just have so much more confidence behind a particular area. Yes, you still want to see the reaction and the confirmation, but at the end of the day, what is trading? Trading is layering information, and though it may come across sometimes as complex, It's actually, when you boil it down to just understanding what it's representing, so in this case, a volume profile is literally just showing you the volume, meaning the amount of orders are being transacted within a particular, well, I guess time frame, but within a particular area. That's it. That's all that one tool is doing. And that one tool can translate to having a lot more confidence in your trades, which then means better risk management, which means better entries, better take profits. And as a trader, they're the things that we can improve on. They're the things that, they seem small, and they may be small in terms of like the profit increase, the lower amounts of risk and losses you're taking. But overall, the bigger picture then starts to grow. That compounding effect that everyone talks about starts to take place.
Yeah.
Well, Yosh, absolute pleasure.
Yeah.
We're going to be doing, of course, a joint panel, you and Akala, shortly. They're going to change the set, so we'll take a quick break. Everyone get fresh air. But come back because we're starting off with Mr. MBB Trader and then a full lineup of live words of wisdom as well. So a round of applause for Trader Yosh. You're going to have to carry that now. Yeah. Is the mic live yet? Yes. Hello, hello. Hello. Anyone hear me? Anyone hear me now? Can you hear me okay? Am I on the, everyone on the back, can you hear me? Yeah? Okay. We are back, thank you. We just had a short break, but now it's time for the portion of Words of Wisdom Live, if you will. We'll see if we can get some questions from the audience. It might be hard to get it from the back. I don't think they have a microphone prepared necessarily, but we have to kick things off with a true pioneer from our podcast. It was the first ever episode to reach 1 million views. It held the record for the highest number of views for years on years on years. It was one of the reasons the podcast actually exploded in the first place. But forgetting the podcast, we're talking about a trader here who absolutely crushed prop firms and just generally, not only himself, has helped, I don't know, maybe hundreds of others. I've actually interviewed a lot of them as well, to go on to having a community who have generated, I believe, 2-3 million plus in payouts across them all. I think you know who it is already, but it's the one and only Mr. NBB Trader, aka Omar. Yeah. It was a lot of effort to get him out here. Yeah, I've been trying to get him to an event for a very long time.
It's been good to come in here, man. Thank you,
It's
Riz.
a pleasure. I don't know, whichever seat you'd like. We have a plaque for you. You're the first to get 1 million views. It had to be in gold as well.
That's nice. Thank you.
Be careful walking around with it. Because it's gold, you might get robbed outside. I'm not sure. We are in London after all. But take that as you will, I'm sorry. Where can we start off? As I mentioned, you not only are an incredible trader yourself, but probably one of the few traders where, year after year, whether it be on my channel or other channels that I've hosted for, I've come across traders who have done really well, been consistent with payouts, but more importantly, consistently trading. And these are people who, were inconsistent, were struggling, and it's rare. Maybe you find one, you come across one, but I'm talking 4 or 5 different individuals who have managed to find consistency after working with you. So what can you talk on in terms of being able to make that change for so many people? What would you say you've done differently maybe than what other people have tried to do?
It's, you know what it is? When you go into trading, I'll give you an example myself. I was in ICT's mentorship, but ICT's mentorship was a bit different. It's, there's no roadmap, it's just content. So people lack his structure or roadmap. That's the number one thing. Like, you don't know where to start. So you go on YouTube, you search how to trade. But your things where you should be considering down the line is what's in your face. Entries. Entries is the last thing that you should be considering. The money's not in the entries, it's the things before the entry and whatnot. Entry is just the most pattern-based part of the trade plan. So I feel like what was different was, you see, like making the structure, getting foundations right, and of course, effective strategy. Like, it doesn't matter if you're disciplined and you can work. You need to have an effective strategy. I feel like I have a decent, effective approach. But one of the things is, it's not a one-size-fits-all. So some people, they're not good at swing trading. They don't like it. Some people like day trading. Some people trade indices, and it's a preference thing. So I'll give an example. You can't take a guy that wants to day trade and force him into swing trading. He'll do it, but he won't last long. So it's all about kind of like, it's so cliche, kind of corny. It's like, you need to spark the light. Do you see my point? Like, the guy wants to day trade. Okay, so we evaluate, what's he doing? He's trying to day trade, but really he's trying to scalp. He doesn't know the difference between the two. So then you actually have to tell him, well, you know what you're doing, you're not really day trading, you're scalping. If you want to day trade, you need to cut this out, put this in. Just little things like that, really.
Well, I remember after speaking to them, and I remember I did one podcast with yourself and a gentleman called Five, who's one of your students who's done consistently well. And one of the things he highlighted was the homework.
Oh, yeah.
Why, setting homework for traders, what does that look like, though? Why is that important? Why does that help them?
I'll give you an example, So, one big thing is, you go on YouTube, Like, let's say an independent self-studying trader, It's not just trading, it's anything. You go on and you self-study, but you don't know if you're doing it right. Like, I'll give you an example. let's say it's an order block, yeah, or like a fair value gap. How do you know that you're actually identifying it right? There's no one there to tell you it's right or wrong. This is the biggest thing. Like a feedback loop is very, very important. So yeah, like everyone has like a material you watch or whatever it is, and then you need someone to actually like validate what you're doing is right. Because the thing is, and this is one of the biggest things, right? You could be doing everything wrong, and you've got to hear now, and everything before was wrong. And imagine having to go and retrace all those steps. So yeah, the homework is there to make sure, and some people, they don't like it, that's fine, but how else are you gonna measure the performance? Like in school, like I'm a very academic person. I done well academically, and if you go to any like Oxford, Cambridge, any like UCL, anything, yeah, they're hard on the academic side. Why? It's the only way you can measure performance. So you shouldn't just stop that there. You should apply that to everything. An example, in the gym, you go, I haven't been to the gym in a while, but when you're in the gym, you should control your eating, measure your weight, you should measure your reps, the weight you're doing. If you go to someone big in the gym, the biggest guy in the gym, yeah, he might be on PEDs, but like, he's gonna tell you exactly what he's training today, tomorrow, what he's gonna eat after. The same, you should be doing that in your trading, because if you can't measure it, you can't control it. So how else are you gonna how else do you know you're getting better? You don't.
Well, there's another thing going off that in terms of measuring and sort of understanding stats. There's one thing you providing stats to traders, but one thing you really push them to do is to go and see the strategies, see the edge, see the playbook, see the pattern for themselves first, and bring that data to you. Why is that important?
I'll give you an example, yeah? A very common, I made a video about this. What we think is right is not what's right. I'll give you an example. How many people here don't trade on Monday? Just because someone said don't trade Monday. Why don't you trade the Monday? Based off what? How many trades? 150. Okay, fair enough. So for me, I've moved into automation now. And the benefit of automation is all data, black and white. The strategy is bad or is good. The equity curve doesn't lie, yeah? Now, there's filters in a strategy, right? If I take out Monday, my equity curve drops. So what does that mean? I should be trading the Monday. So really, you can't take things, my word, your word, anyone's word. You have to go and validate it for yourself. Because also, one thing is the data may be for a specific strategy. Like the brother over there said Monday works for him. Maybe he's got a strategy where Monday is net losing. It could be something based off like a weekly expansion. Monday's kind of slow for that. A scalper doesn't really need too much volatility to kind of get a move. So why does it matter to a scalper or someone that's on a really low time frame? It doesn't matter. So you always need to go and validate it yourself. When I did that, I came to a lot of realizations in trading, like skipping the Monday, weekly profile, like Monday makes Tuesday makes the opposite end of the range, and Friday, Thursday caps it. But if you go back the last 3-4 years, really, Monday's made the opposite, and Friday's capped it. So data a few years ago is not even applicable today. I'll give an example as well on that. In the 90s, RSI was a big thing, and it was a widely accepted thing. No one uses RSI anymore. Even institutionally, people have moved far away from the RSI. So if you're using the data from the 90s, what would you be using? The RSI. But it's not effective anymore. So that's why you have to go and validate these things for yourself.
How often would you say that you have to sort of go over the data again? Because as you say, things do change quite consistently.
You collect it as you go. So you collect it as you go, and then so there's something called variance. Variance is basically like anomalies outside of the data set. So not really anomalies. It's part of the data, but so let's say 50% win rate. You take the same trade every single time. The losing ones are just variance. They just happen. It's just every trade can lose as well. So to really make a decision on changing data, you really need a lot goes into that decision, I think. Like to drop something or to say like this was wrong. Like even scientifically, imagine for us to leave like a big accepted thing like evolution or something. What evidence would we need to see to drop that? Like very overwhelming. It's the same thing for your trading. If you see overwhelming evidence to drop it, then you should drop it. If you don't see it, then just run it. And also recency bias. You can't let like the last 2-3 trades dictate. I'll give you an example, yeah? Let's say you trade a fair value gap. Let's say you trade 50%, the fair value gap, that's 50% of the range, yeah? or 60% in the range. But now you're seeing the last 3 days, the fair value gap at 50% is the one that's being met. What are you going to do? Go in for 50% next time. Then the next 15 trades go to 60%. You fell into a recency bias. And that's, I think, a lot of people kind of fall into that.
I think a lot of people fall into that as well because they don't have the data or they haven't gone into the data. So then therefore, it's so easy then to have a particular pattern they may have seen 2-3 times. Let's say Monday as an example.
Yeah.
So, you know, you're meant to have the rule of not trading Monday for that person, but then they saw Monday it worked that 1 week. The next Monday they saw it worked that second week. So the third month,
But
they're on it.
you know what it is as well? How you collect the data is as good as the data. So how are you capturing your data? When I mean data, it's not really complicated. It's just how you're capturing it. I'll give you an example. You can say your win rate is 90%, but you captured it with hindsight. So is your win rate really 90%? It's not, because you captured it with hindsight. So how you collect and gather the data, you see like how we do it in science. It's the same way. The data collection doesn't change because it's trading. How you collect the data is as good as how verifiable the data is.
And we have to talk about prop firms. As we talked about earlier, not only have you been consistent with prop firms in the past, now going to automation, which is incredible to hear, and I'm sure that's a whole different topic, maybe for another day. But you've had countless traders as well who have also done the same, had that consistency. Is there a particular playbook that you use when tackling prop firms, maybe the differences between challengers versus the actual funded accounts?
The only difference, you'll just, I think you'll just change the risk. But a good trader knows how to change the risk. This is the thing. You see, the trade setups, they shouldn't change. You should just change. So I'll give you an example. Yeah? The challenge phase is opportunity cost. You don't make no money there. So you don't want to spend time there. So you want to blitz through that, but blitzing through doesn't mean trading like a degen, right? So maybe you'll up the risk, like you'll use 50 to 75%, or some people use double. I'd say if you risk 1% on a live, risk 1.5 on a eval. But it all again, it comes down to your frequency, risk or ruin. Are you familiar with risk or ruin? So risk or ruin, that matters too. So depending on your strategy, you can't tell a guy with 2 trade frequency a week to risk the same as a guy with 20 trade frequency a week. 20 trades needs a lot more controlled risk than 2 trades. So whatever it is that you're doing, and this is why you can't look at what other people are doing, because if a guy, you can't take a guy that's trading 2 trades a week and you're trading 10. You can't relate to that guy. So whatever your trade frequency is, you want to make it so that you don't, if you go in an inevitable losing streak, you don't lose the account. Be a bit more risk heavy on the eval part. Again, doesn't mean double, triple your risk, like 50%, so 1.5 times the risk. And in terms of the trades, look, how you trade shouldn't change. So a lot of people have a trading problem. They don't have this psychology issue. For a lot of people, in my opinion, doesn't exist. They just don't have an effective approach to the market. So how you trade the live, how I was trading prop, yeah, even my automation is just what I was doing discretion. Nothing's changed. It's just different forms, right? So if you're trading a specific approach on eval, that shouldn't change in the live. Why should that change in the live? I never understood that. The only thing that needs to change is the risk profile that you use. And secondly, the other thing you can do is, so if you trade like euro for the whole year, I haven't traded euro this whole year, but if you trade euro this whole year, the frequency is really low. It's been quite a sticky market to trade, yeah? So maybe then just increase your basket. So diversify a bit. Maybe you got euro and like a yen pair and one indice. And now you got reasons to get more frequency in, because the 2 ways to get through the account faster is either more risk or more frequency, or a healthy amount of both. So it's just in the numbers. Increase the frequency. How you increase the frequency is just look at more markets, as well as maybe play around with the risk a bit. Literally nothing else changed.
So really, there's such a heavy focus on the data side of things. How you collect that data, being able to actually collect data on your edge so you have an actual edge within the markets. And so even if you're doing that manually or through automation, regardless, that principle and that foundation is needed and necessary.
Well, yeah, I mean, the edge, look, you know, there's something called expectancy in trading. Yeah? Expectancy is just, you have a positive or like a negative expectancy. If you play enough, you're going to be in the green. If you play long enough, you'll be in the red, yeah? So like casinos are like a negative expectancy because they don't have a 50-50 hit rate and they don't offer like a bare odds in like a 1-to-1. So if you set the casino long enough, statistically you'll lose money. But trading, it doesn't need to be like that because you can have positive expectancy with, I'll give you an example, yeah? Like a golden recipe to any strategy, however it is you're trading, yeah? And give or take a 50% win rate, 1.6 SAR, a bit more maybe. Anything above is a bonus, but 1.6 SAR and just a healthy frequency. The only thing you need to do is control the bet size. Now, in terms of controlling the bet size, this is the only dynamic that changes from eval to live. Do you see my point? So let's say I'm running this system. I know if I control the bet size, I can weather a drawdown, and when my edge is offered, I'll build equity. It's all about weathering that drawdown that comes. This is what when people go into a drawdown, they can't recover it. This is most people's problem. So if you go on like Google, yeah, type in risk or ruin calculator, I think there's one called Swift FX. Put in your stats, it's gonna say like win rate, risk to reward, and all of these things, right? And it will tell you your risk of ruin. If your risk of ruin is high, like 70, 80%, you're risking way too much. You should be around 10%. Now, if you're a bit more risk heavy and you accept the risk, like you have a bit more bankroll to buy accounts, maybe go to 25%. But anything excessive of that is a bit too high. And that's the risk. It's just a plug and play. Like you just put that risk in and the rest is done by itself. Yep. Nothing changes, it's the same strategy. The only thing that changes there is just the risk profile.
Man, Omar, I wish we had more time. I'm sure there's a lot more things to go into, but I appreciate you being here today.
No, thank you
and
for bringing me on.
We hopefully will see you at another one in the future. I managed to get you out for this one somehow.
Yeah, it was nice. Yeah, definitely.
But we'll see you hopefully on Chart Academy soon. We talked about it.
Yeah, no problem. I'll see you there.
But you're on YouTube finally as well. So make sure everyone goes and sees that as well.
Yeah, that's it then.
That's done.
Yeah.
Thank you, man.
Cool.
Everyone, round of applause for Omar. All right, don't forget that, yeah. I think I've ruined everyone's day by giving them these plaques they have to carry around now and have to remember and hopefully don't forget. But we're not stopping there. We have another incredible guest coming to the stage. This is actually a pioneer of the futures prop firm industry, someone who's really led the way and created something that really shaped the industry as well, a very unique proposition being the right word. It's the founder of Apex himself, Mr. Daryl Martin. Me and Daryl actually did a podcast yesterday, was it, right?
Yeah.
Yesterday. It was a really incredible time. I'm honored to sit with you today.
Yeah.
Have a seat. Let me switch
Glad
this
to be
one
here.
There we go. But Daryl, I guess we can kick things off straight away. As I mentioned, the futures space, and specifically the prop firm side of the futures space, has expanded dramatically over recent years.
There used to be like 2 companies, and now there's like, well, you can see
so many next door, yeah. But like,
now there's an Expo.
when you see that, like, how does that make you feel? Knowing that you started so very early before there were the amount of traders now, and to see where it's gone to now, how does that make you feel? Number one, and then 2, is there anything that you foresee coming in the future or expect to see from the space that traders here in attendance should know about?
Right.
It actually makes me really glad to see that it's doing so well. I started Apex Trader Funding to help traders who were putting in the work and learning how to trade, but just didn't have the capital or didn't want to risk their kid's college account, their savings, their retirement. And I'm like, hey, I didn't see anybody else doing it right. So I decided to start up Apex Trader Funding myself and put it together. And to see so many other companies coming out now, and now we've seen a lot of companies come and go. So that's obviously disappointing when that happens because they come out all blazing thinking they know what to do and they don't. But to see now that there's like 4 or 5 like main companies that are doing really well in the prop space and giving it a good name, I think that's awesome. I think competition's healthy. Yeah. So I don't have any problem with having competition. And I think there's plenty of traders to go around. There's traders that haven't even heard about prop funds until just the last 3 months. And the demographic has changed. It's a lot younger now. Yeah. So I've noticed a transition from people in their 30s, 40s, 50s, and now we're seeing a lot of people in their 20s and 30s come up that want to do it. So that means we're helping more people, more companies out there globally, helping people in multiple industries: crypto, forex, futures, CFDs, on down the list. So I think it's great. As far as what's coming down the pipeline, there's going to be it's already happening, but regulation is starting to come into play. And I think that's going to be a very healthy thing. I like regulation and I don't like regulation.
Of course, yeah.
There's goods and bads to it. But the CME is already now having to approve new prop firms coming on space with certain vendors. and make sure they have a path to prop to live. So it's not just a sim gamification. And so that's going to be happening more and more. You pretty much see almost every prop firm out there now is offering live accounts and moving people to live accounts. And I think that's going to make it a safer space. So, because they're making sure companies are funded, that they, are actually treating it as a path to trading on an exchange, which I think is very important. You want to become self-sufficient. That's the ultimate goal. Not to be relying on a prop firm. Prop firm's a step to get you there.
Yeah.
So that way you can have it not only for yourself, but hopefully for generations to come. My kids trade. I have a 13-year-old and a 19-year-old, and they both trade. That's how they make their money. And one of them's in college right now, but instead of having a job at college, he gets to trade.
Yeah.
And then my 13-year-old, he wants to spend $500 on roadblocks or whatever. He'll come down and he'll trade his account. He has a custodial account. And so, it's a very cool thing. And I think the regulation will make it safer. And we're trying to, along with some of the other larger prop firms, trying to help head that off. Already have met with the CME and, figure out what that needs to look like to make it a safe space for traders out there.
And, Apex being one of the sort of founding fathers, if you will, within the future space, at this point, you probably have one of the largest trader base, in terms of the amount of traders who trade with Apex. Like when you think about that, what are the reoccurring themes you've seen, especially over the years, and have they changed at all in terms of those who succeed using the prop firms versus those who maybe struggle and still trying to find their place?
Yeah, I'd say one of the things I always said with Apex Investing, which is my education company, is trade to trade well. Don't trade to make money. And that sounds weird, but like if you take, I'll say American football. I'm in London, so I got to put it the right way, right? You're not, or you take, football, whatever, being the World Cup going on.
Yeah.
It's not always about scoring the goal. It's about playing well. If you play well, you'll score the goals, And a lot of traders come in and they're just like about money, 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 and they're coming in, they're blowing accounts, and they're all about speed. And it's like trading is a long-term game, and you start slow and you can build up. I teach how to start off with one contract and build up to 7 contracts over a course of like 8 months, and make $250 a year, as just a beginning base. And I mean that's not a bad income, $250,000, for your first year in trading. So. And we've had, I don't know how many millionaire payouts. We had dozens of millionaires that we paid out or made millionaires. And it's those who took it slow. The first millionaire trader we paid out, he was trading. He was actually trading really well, but he kept trading too big because he was trying to get that big score all the time. And I called him up and I'm like, I'm looking at you. You're using entries, you're using stops, you're using take profits, but you're trading too large. You just need to slow down. And 3 months later, he made over $1 million and pulled out. But before that, he was just pouring cash in. And so if traders will just slow down and be consistent and go, I'm here to trade well, to have a passion about trading, not just about making money, then I'll learn how to trade well and not how to figure out how to work a system just to get a payment. Because that won't help you, especially when you move to live, right? Because you got to be able to trade what you can actually do in the market.
Yeah.
And so I think we're helping traders go from not only the education, but to the sim, and then the sim prop, and then getting to go into the live accounts without having to have all that psychological battle. And one of the things that we're doing is with all of our live traders, we're going to be releasing, I have a 10-hour course on psychological trading, and that I did at a live expo, and we're going to give that to all of our live traders that are coming in. So that way they learn how to deal with the psychology of live trading.
Have you found there's a huge shift and a difference and almost a hurdle for a lot of traders who have gotten so used to trading just in the sim environment within prop firms that when it comes to trading live and making that transition, it's almost a hesitation or something that really they almost feel unprepared for, even if they've been trading successfully through the sim prop model for years. And then suddenly that hurdle is there.
They almost feel like it's a punishment.
Yeah.
But it's sort of like going to high school and then you graduate and we're saying, okay, now you got to start over and go to college. Well, it's just the next progressive step. It's not a punishment, it's not a takeaway, it's just now you are starting over, but you're on another step of your journey to, go even further. And traders that we have a lot of traders that have never traded live. Right? They came in as prop, that's all they've ever done. They don't understand what liquidity is. and how many contracts are actually available. If you go in and you're trading 5, 10, 20 accounts and you're trading 10 contracts a piece and you're trying to trade the NASDAQ, well, if you do that on a live account, you're going to move the whole market, and then it's going to flop right back against you. I've moved the market a few times on accident, trading too large, and it's a scary thing to happen. So, and it usually ends up blowing your account. And so, we're trying to do it the right way and set it up in a way that helps traders slowly make that transition so they can be successful in the long term.
As you mentioned earlier, like Apex is in a unique position, and it's such an incredible position in the sense that you've had so many multiple 6 figures and even 7-figure payouts to traders. Like, why do you think Apex is almost alone, even after so many years, in that respect, that only Apex has managed to do those sort of sizable payouts to traders?
I think it's a couple things. One is allowing 20 accounts, and we teach people trade small. So if you can trade and make $200, that doesn't seem like a big deal. Most people don't want to trade and make $200. But if you do that times 20 accounts, then all of a sudden, you're making, $4,000. So it adds up, and we're doing that to try to enforce trading small and letting it grow, as time goes on. And so I think having the multiple accounts was a huge thing. We've made our rules a lot simpler. The rules that we have in place are there literally to try to get you to mimic what you would do in a live account. So we do have rules, and we've had to enforce some of those rules, as people tried to do stuff that you wouldn't do in a live account. But literally they're just there to get you prepped for live. So, which is the ultimate pinnacle of trading, right? Being able to trade your own money, and be able to pass that on and teach your kids how to trade, and because my kids get to do whatever they want to do, and still have an income. Yeah. So they don't have to worry about picking their job based on income. They can pick their job based on their passion. So. Would
you say almost, it's probably a hard question to answer, mainly because of your position, but as someone who traded live capital way before SIM was even around.
Yeah, I can imagine if I would have had that to begin with.
I can imagine. Well, this is what I was going to say, is that do you think there's almost a con for people who are only experiencing the SIM environment because they're not kind of building their risk tolerance for their own capital at that point? And so the first time can normally be when they get moved to a live account, and they almost, as we talked about, have that hurdle.
Exactly, yeah. It can definitely be a hindrance because it's a knowledge base you don't have. And that's one thing it's why it's taken us a little bit to get our live program up, because I didn't just want to throw people into live and watch them all crash in the next 48 hours. That's not my goal. My goal is they're long-term successful. They're making payout after payout after payout after payout, because we make a percentage off of the payouts of live. So obviously we want them to be successful, right? It's a mutually beneficial thing. And if they're blowing accounts, that's not helping us. If they're making money, that's helping everybody. So, but yeah, not having that experience in live trading, a lot of times you just don't know what you don't know. And I had to start off in live trading. I did SIM for a year, but that was just simulated trading. It wasn't like prop fund trading before I made my first trade. And then most traders don't do that, right? So they hop right in and they just trade live, and they get burnt really quick. And but at the same time, it can be very helpful because you learn how to get a strategy. You can learn how to get a risk management system if you'll take it seriously. If you'll not treat it like it's a gamified prop game, and you'll treat it like it's live trading, not only in your prop or your PA account, but in a valuation account. We see a lot of traders come in and they just want to pass in one day, and I get that. I get not wanting, you're wanting to make money, and you can't make it while you're in the evaluation phase. But if you'll treat the evaluation like you treat the performance account, then you're probably likely to trade about the same in your performance account as you did in your evaluation. So if you're going through 20 evaluations and then you pass and you go, man, it seems like I always get good, and then I go into the PA and then I blow it. Well, how many times were you blowing it in the evaluation? I try to treat the evaluation the same way, build it up the same way. You can pass in a day. That doesn't mean you should pass in a day. Maybe you catch a runner, and that's fantastic. But if it takes you a week, then it takes you a week. It takes you 2 weeks. It takes you 2 weeks. And you pass, and then you go in and you slowly and build that PA account. Don't go all in. Don't go like I'm trying to get money right away. And the thing is, that's when the money adds up. And the ones that are successful are the ones that don't push it really hard. The ones that get payout after payout after payout after payout. And the ones that spend a lot of money on fees are the ones who are just running after payouts instead of running after trading well.
What about in terms of being able to make that sort of slow down the pace? You know, most people, and a lot of the issues we're discussing is having to rush or having that feeling of trying to rush, passing quickly, getting to that payout quickly. How do traders really take that step back, do you think, and be able to slow down and trust the process and go small first and let that compounding effect take place?
You have to look forward and go, what are my goals? So everything starts with the goal. If you don't have a goal and you're just sitting there going, I'm just trying to make money, then you're not going to emphasize what are the steps, what are the milestones I need to take to accomplish that. So you got to go, is what I'm doing now going to work for a year, going to work for 2 years? Because right now I'm just blowing through evaluation accounts, I'm blowing through PA accounts, I'm getting one payout, and I go back to evaluation, I go to PA, I get one payout, I go back to evaluation, I go to PA. Is that a long-term successful strategy? You got to go, no, it's not. So what's going to work for me now that I can do in 12 months from now and still be making money? Because my goal is not to pay all the evaluation fees I can. My goal is to make as much money as I can. Although that way to do that is to take it slow, build it up, grow it, and as it compounds, it doesn't have to compound massively, but as it compounds, then you can make a lot of money. And you don't have to be trading, crazy contract sizes.
Do you feel like with the amount of changes in the prop space that maybe traders are so quick to get those larger numbers? So you hear a lot of traders, especially those creators out there, like I'm 1 million funded, 2 million funded, 3, and it becomes almost like trying to focus too much on titles, too much on having these accolades or this followership, or a focus away from trading, essentially.
Right. It's almost like some people are chasing the number so they can then get the following, so they can then make money on whether it be affiliates, which I mean, it's not a bad thing, okay? But if they ever lose that sight of wanting to be a great trader and help other people be great traders, then they're not doing a good service to themselves or anybody else.
Yeah.
So, but if they're like, hey, I want to be a good trader and I want to be successful, and part of my plan is, hey, I want to make $1 million, $2 million, $5 million, and be able to say I've done this, but also like you've had some people on stage, which has been excellent, where they've helped other people do the same thing. Not just I want to do it and get a following and make commissions, but I want to do it, get a following, and make successful traders. Yeah. And you're not going to do that by churning and burning. You're going to do that by going slow, building it up, and letting it grow.
So to say, like in the end, really, it comes down to focusing on the trading. There's a lot of distractions, for better or worse. Like even obviously I make content and I have the podcast, etc. But my message to everyone is always focus on the trading, focus on the skill set, focus on yourself. Because at the end of the day, that's the only way you'll make exponential progress. And you've trained and been around for hundreds of thousands of traders, so no one better has seen that than yourself.
We have 400,000 plus traders.
Which is absolutely incredible. And when you look at that size, well, I'm sure it started off much slower and smaller, but then has exponentially grown, especially over recent years. Do you ever find that the stats change at all? Because we've always heard that 90% of traders lose 90% of their capitals in 90 days. Like, why do you think that hasn't changed, even with access to so much information, even now with expos and you can meet the traders, you can meet the companies, everything. You'd think having that access, having even technology grow, and access to better technology, access to better information, and the speed of information, why haven't we seen that change in terms of the stats with traders?
I think in some ways we have seen a change in the stats. I know just here, the people that I've met have come up and said, you changed my trading path completely, with the prop firm space. And because they were allowed to risk money without losing money, so they could refund an account and refund an account and refund an account for 19 or 20 bucks versus having to put another $2,000 or $3,000 or $5,000 in. And so it gave them the opportunity to fail until they were able to succeed. So I think we've actually seen, I know at Apex, we've seen, we pay out 25,000 traders, 30,000 traders a month. And it started off, our first year, we paid out 10 million. And they asked me it was funny, they're like, what are your goals for Apex for next year? And I'm like, to do 10 times that amount. And to pay out 100 million, And we hit that. We hit like $110 million the next year. And so we definitely have seen a lot of traders that have progressed, but I think the stat itself is there just because traders don't know like I said, it's a simple phrase, and it's almost enough that you can just brush it off. But the trade to trade well, you know, you have to have a passion for trading and a passion for trading well, which is managing yourself, managing your system. You know, I've heard your guys up here talking about stops and stop losses and entries, and you know, you control your entry because you decide that you get in, and you control your stop, and then you manage your take profit. And a lot of traders don't have a management plan for their take profit when they get in, and they have no stop loss. They go, can I trade without a stop loss? And I'm like, your funeral, you know, you can, but like, there's so many emotions that I think everybody in here that's traded. Can I get a raise of hands of how many people get a lot of emotion once they've entered a trade on how to manage that as the profit starts going up or down? Does anybody get emotions for them? Nobody get emotions? Okay, all right, we got some honest people. There we go. So if you've traded, you should have emotions. So, and over time, you're going to learn how to manage those emotions, but they're not going to go away.
Yeah.
You know, and so you're going to, those emotions, we make decisions based on thought, and then we also plus emotion. And so if you don't learn how to manage that, if you don't have that plan in front to manage your emotion, which is the thought to manage the emotion, then the emotion will manage you. And a lot of traders just haven't learned how to do that. And it's like, you just have a plan, have an entry, have a stop, have a take profit. If it's not working, you can work on changing your strategy, but know your stats. You know, a lot of traders, like, how many know their actual stats on their trading plan? What is your win-loss ratio? What is, you know, what's your average profit to average loss ratio? You know, how do you know when to stop? That's one of the biggest questions that most traders can't answer, is when do I stop trading for the day? Because the goal is not to trade. You didn't get into trading to trade for 8 hours in front of a computer. Like, we got into trading to have time and free and money, and I mean, money just gives you time.
Yeah.
You know, and so one thing I learned over time is I go for 3 trades for 10 ticks. You know, and that doesn't sound like a whole lot, but when you're doing a lot of contracts, that adds up. You know, and now if the trade keeps going and things are in my favor, I'll trail it if things are right. And then I'll add into a winning trade. Whereas a lot of people, they add into their losing trades. You know, and that just piles up their losses. So, but if I hit my 3 trades for 10 ticks, I just stop and walk away. And I reward myself. I go take my kids out of school and I take them to the zoo, or go, you know, have lunch with my wife, or, you know, just go horseback riding. I have a ranch. I like to ride. So, you know, do things I enjoy doing. Go fish for the day. You know, and people are like, oh, you're not doing anything. I'm like, no, I hit my goals for the day, and now I get to enjoy my life. And I don't live to trade, I trade to live.
Nice.
You know, and so you have to have that plan, whatever that plan is, but you got to know when you're going to stop, whether you're up or down, bad day, good day, when do you stop trading? And some traders will say, I just keep going until I do this, and that's, I mean, you can trade all day long doing that, and I don't want to trade 8 hours a day. You know, I want to trade for 2 or 3 at most, and be done. That's my personal trading style, you know, and because I'd much rather spend time with my family and my friends.
Definitely.
So,
I think that's the goal. Darryl, we're going to see you again on the panel later to finish the day. It's been an absolute pleasure. Everyone, a round of applause for Darryl.
Thank you.
Thank you. We'll head on next.
Thank you.
Thank you. I'll see you on the round table.
All right, see you then. Thank you.
We have another trader coming up for you, actually returning from our Chart Fanatics live that we did earlier today. I believe, hopefully he's back there. I can't see anything back there, so I'm worried I'll say the name and then they're not actually there, and then I'll just be sat here by myself, but we'll see. But of course, it's the one and only Andrea Chimmy, I believe, is next. He is here.
Hello. Welcome back.
Welcome
Hi, myself.
back. Don't worry, I'm not going to give you another award, okay?
That's fine.
Don't worry.
Only one.
Only one, yeah. Well, we have our words of wisdom to come, right? I know you've been waiting.
Yeah, I've been waiting. I've been stressing you out about posting it. There's so many good clips from that episode. I can't wait people to watch that.
I know. Well, thanks for being here again.
Nice to be here.
We want to go straight into it. Obviously, we talked about strategy. We talked about order flow in particular, trying to be visual with the whiteboard. But now that we're sat here, I want to, one of the intros I did for you was in regards to training under world champion traders.
Right.
Right, and you've done not only one, we're talking multiple champions here. And I wanted to ask you, what are like the key principles from those world champion traders that you picked up and been able to identify as key things that allowed you yourself as a trader to really excel, and what allowed them to perform as champions themselves?
That's a great question. Well, Well, first of all, just like all of us here, deep inside, they're all degenerate gamblers. Okay? But in a good way. As in, this is something so counterintuitive. I thought that the best traders in the world would be so exempt from emotions.
Yeah.
And just be cool, you know, like, hey, I'm a fucking world champion trader. I'm just gonna click and not care. You know, none of that. They're emotional. They're human. They're very human. So if there's one thing other than the technical part that we've talked about that it really struck me and really opened my mind, is the fact that they don't try and control their emotion. They don't try and force their psychology to not exist. You know, you can't just stop that from happening. So there are some things that, as a human, you would respond to when you see your P&L going up and down, right? So they're very human. The difference is they don't feel these emotions so very deeply as, let's say, a new trader, but also they've learned how to not have them interfere with the decisional process. So it's not, I'm controlling my emotions and forcing it and trying to hold it on. It's like, I have it, I feel it, I let it out, I get angry at the chart, I say, fuck you, NASDAQ, okay? And I move on with the next trade. It's just as easy as that. I'm just not gonna take a decision that's gonna fuck up my trading account based on that bad feeling. So I just don't act upon it, but I still feel it, so it's fine. Like, it's just a matter of how you, if you let that emotion, let's say, sprout into something extremely bad. But other than that, they're very human. And what was the question again? Like, what was the main takeaways,
In terms
right?
of the principles, yes.
Yeah, I mean, well, that's the first one. The second one I would say is, so I guess a lot of people here, they're trying to make a living out of trading, right? Most of the traders here might, have that as a goal. Most of the big traders I've met from the professional space, rather than using trading to make money, they're trying to use trading as a way to grow money, right? Because as a trader, you have to remember that you're in the riskiest part of finance, right? Finance is already it's all about risk and reward, risk and opportunity. So I would say that the way they approach it is more of a, hey, I have a lot of money and I'm gonna make it grow at a faster pace than buying S&P 500, right? Because, as traders, what a good strategy is really is anything that has a better risk-adjusted return than investing in the stock market, right? That's what we're all trying to do. We all try to beat the benchmark. We all try to perform, on average, historically, more than 10% per year. And when the market calls, we are ready to answer, right? And so that's what we try to do regularly. And there is no pressure in these traders of, I have to make a living out of trading this month, otherwise I won't pay my bills, otherwise my life won't change, and I have to become a millionaire because I'm fucking broke. There's none of that. Like, all these guys, they have slowly built their wealth not only through trading. Most maybe they had a business, then they sold the business, they started trading. Or they had a job, they saved money, and then they started trading. But a lot of these, a lot of new traders just start with the wrong assumption that trading is gonna be your gateway to massive wealth in a couple years. That's not gonna happen, guys. Like, that's genuinely not gonna happen. You have to build it through time. It's a marathon, it's not a sprint. And what the other main takeaway I had from these guys is that they are so good at trading that money comes to them. They've opened, their little hedge fund or their little certificate, which is not as, let's say, as costly and as, bureaucratically dense as a hedge fund. So like AMCs and these kind of legal structures that are very light. And then they, they have amazing performance. They work on the skill. And then they become the prop firm, quote unquote. Like they start raising capital. There are some investors and blah, blah, blah. They regulate it. And they just focused so well on the skill that if you become a good trader yourself, you don't even need to have and put in the capital yourself. You can audit your track record, take it to a hedge fund, and they'll fund you. Or with prop firms as well. If you have a good trading performance, a prop firm that is a good prop firm will maybe put you onto a live account, like a lot of these partners are doing. And so it's all about focusing on building the skill building it for a couple of years, study, research a lot of edge, and know what the hell you're doing. This is also the last thing I would say is they know what the hell they're doing. They're not trying to read a bunch of charts and say, okay, based on what a guy told me on YouTube, I'm just going to buy because there's a breakout. Yeah, it's a little bit more than that. They know a little bit of macro. They know a little bit of fundamentals. They need a little bit of statistical analysis. They know the deep plumbing of the markets and order flow and options and all the stuff that we've been through. And they never stop learning. They never stop learning. The top traders in the world are eternal students. They don't assume that they've got it because every year the market changes. The regime shifts, the volatility, how a directional day stays directional throughout the day, and how, let's say, wide are the swings to get to the target. All these things changes, right? We've seen the last few months in the market, it was all about the next Trump tweet. No one was prepared for that. These guys have been trading for 30 years, but they still managed to make a lot of money in this period. I personally didn't. I had a great beginning of the year, and then March took away most of the profits from that first month, because I never scalped through order for the ES during a Trump presidency, a Trump situation. So, it's about being able to adapt yourself to how market evolves. And if you choose trading as your main source of income, as your main profession, just know it's not going to be easy. It's not something that you just learn once and you have forever. It's nothing like that. You need to constantly study, constantly research, find new edges, find new ways to adapt to the market. And the last thing I would say is they don't just trade one strategy. Most of these traders have multiple strategies. And maybe part of them, they run it automatically with some trading systems. They might have a part of their money managed with, active investing. So maybe they have a little bit holding of Bitcoin, a little bit holding on S&P, a little bit holding on bonds, and they kind of turn around investment, passive stuff as well, which is great. A lot of traders don't invest at all. You're a trader, you're a finance bro, and you're not investing. It's a little bit, you're leaving a lot of money on the table. And just relying on one single strategy for the rest of your life, it's risky. Because that strategy could stop working. We've seen that happen with so many strategies. So one of the most important things is that diversify. They diversify. They have maybe a swing trading strategy, an investment part of their portfolio, some into day trading, some into swing, or they build teams also, right? This is also the craziest thing. Most traders are just lone wolves. Doesn't have to be that way, guys. Doesn't have to be that way. You can find some common-minded trader and build your own little trading floor, and everyone is specialized in some different things, and you diversify the entire trading team. You can think of something like that. So yeah, these are the main.
Well, to your point, observing and speaking with Fabio quite consistently. One thing I've noticed with him is he is constantly speaking to other traders. Whether they're on the team or not, he'll reach out to traders, understand their edge, have conversations with that. And that's someone who's already an incredible trader, but he's, as you said, staying a student of the game and always developing and sharpening. One question I had off the back of that is, the term you hear in trading a lot, keep it simple.
Yeah.
What would your reaction be to such a statement?
I somewhat agree. But, how you make it simple is the real question. Because if you think about beginner traders, they say trading should be easy. In the middle, you have all the traders that say trading should be this and this and this and this and that, and you need to put this and together, and you'd like to complex a lot. And then you go back to the professional, and they also say trading should be easy. Trading should be simple, right? But how do you get to simplify? Trading should be simple, but how simple? What do I simplify on is the real question. Because these great traders, they know a lot of stuff. They know about. There's so many information you could choose from, so many strategies, so many markets, Forex is just one, but there's so many markets, so many strategies, and they know how to keep it simple because they've tried a bunch of different stuff before. So the trying a lot of stuff is part of the process, because you cannot know right away if one strategy is going to be the right strategy for you. If scalping is the thing for you, you could be better off swing trading, and you might not know it. You might not know that it's a better fit for your personality to not be a super active scalper, but because you have ADHD, it's better to do swing trading. I don't know. It's so it's a multivariate kind of world. It's very heterogeneous, and you know, it's very important that the trader realize this. Yeah.
Seeing as we're at Prop Firm Expo, my question to you would be, I know obviously you traded prop firms in the past, and
Yes,
I'm not
I
sure
have.
if still doing so now, but based on obviously your interaction within the community, I'm sure there's tons of traders that you speak to who are trading firms. Like,
Yeah.
what would you say the correct mindset to trading prop firms is, especially when you come from such a professional environment as well?
Yeah.
There's a path where I think a lot of the new traders, the retail audience, if you will, they're going to go to prop firms. That's
Yeah.
going to be the start of their journey at the very least.
Totally.
What would you say that long-term mindset for a prop trader should be?
Yeah, I mean, the most important thing is to go with a prop firm that is solid, that pays out, and that you feel that can, if you want to, for the long term, be in the prop firm space, then go for it, you know? But just know that you're gonna have to choose very well. You're always gonna be sticking to some rules. So I would say not just go full on with prop firms like for the super long term, but also have your own trading account. I think that's a very smart idea, and always diversify, right? Always diversifying is a wise choice for traders. Then on how to approach prop firms and how to actually be successful at prop firms, I have done some discrete money with prop firms. The guy that I've seen most successful with prop firms is like here in the audience somewhere. It's Gianluca, and he's been milking. I mean, he's been really doing a lot of good payouts from prop firms by using the same exact, very mechanical strategy that he knows has an edge, right? And regardless if it's with prop firm or with normal brokerage accounts, the only difference between these worlds is the approach to risk, right? Because with a normal account, you can be more free and more elastic and more, let's say, adaptive to market conditions with your risk management. But with prop firms, you need to stick to some rules, some drawdown, some maximum drawdown, like all these rules. And his model was so good that it was be able to, you know, both win the World Trading Championships and the Robbins Cup, and also be massively successful with prop firms. And a lot of newcomers traders that I see that are very good with prop firms are also very mechanical, are also very also much into a lot of data analysis, right? Because if you crunch the numbers, if you know how to crunch the numbers, you can fine-tune your strategy based on data that you're basing your data on something that have proven to work in the past. And this is something that a lot of traders don't do. They don't do a lot of back testing. They just jump in the markets and hope for the best. And that's a good recipe for disaster, you know, because it's because a lot of people then say, yeah, but you need to learn by doing. Yeah, and they say back testing is bullshit. Yeah, it's not. Okay, I'm just telling you right now, it's not. Past data is not a guarantee for future results, but no past data, it's a guarantee of future failure. So you need to get your data on. You need to crunch your numbers. You need to know what the hell you're doing.
Well, that leads me to a good question in terms of, you know, what is the reality, not regardless of being a successful prop firm trader or just a successful trader as a whole, what is the level of work, the level of detail, the level of input that a trader has to do? As you mentioned, like a lot of people are watching YouTube videos, watching content creators, finding their information online, which is no problem with that. But in terms of the reality of actually being a successful trader, because, you know, we know that successful trading can be marketed in a very incorrect way.
Oh, yeah.
So what is the reality of actually starting to perform, finding your feet, actually even long term? Because I think there is a misconception where as people assume there's a destination. I know I had that early in my career. I thought, you know, once I'm consistently profitable, I'm consistently profitable, and then that's it. And then from there, it's easy, and I've got it down, and I hold the keys, and you know, I can do what I want from then. But what's the reality?
Reality, I mean, you could become a guru.
You have that choice. It's always there.
You have a choice, you know. You can start making content. It's awesome. No, but for real, if you want to be a massively successful trader, you need to understand first you need to define what success is and what's your goal, right? Because if your goal is Lambos and travels and girls and then getting laid and all, like that's not trading. Trading is a boring office finance job. You're staying in front of a chart and trying to do the best to be better than anyone else in the world, okay? So how do you measure your success in trading? Do you measure it with how much money you make every single month from prop firms? That's a very bad metric. Most successful traders think in terms not of what they make this month, not the next trade, not the next 3 months, not what I make in a year, not what I make in, this trading window. They measure it on their average risk-adjusted return. Does anyone know what risk-adjusted return means? It's how much you get paid per unit of risk. And there's a specific metric called the Sharpe ratio. Write it down. If you guys haven't been into trading for more than 2 years, write down Sharpe ratio. Look what that is and aim at having a Sharpe ratio better than 1, which means on average, for every dollar I risk, I gain $1 more than just lending the money for free to the government and get free money back. So what we're trying to do really as trader, for trading to be worth your time, I mean, think, like everyone now, let's do this experiment. Think about the trading performance you've had over the last year, okay? Keep that number in your mind. 90% of people will probably have lost money, right? 10% of people might be somewhere around break even or maybe a little bit profitable. A very small percentage is likely to be profitable. On the other hand, if you invested the same amount of money you invested trading in the S&P 500 exactly 1 year ago, or in the NASDAQ 1 year ago, you would have almost doubled your money, having spent 0 time in front of a chart, having spent $0 on commission, and 100% of the time being successful, and doubled your money. So, in order for trading to even make sense to you guys, it should be at least historically possible that you outperform buying and holding. Because if you can perform better by buying and holding, why would you put all of this effort, this stress, and this huge effort that you're doing to try and make this trading thing work if you're not even sure you're gonna get there? Just because a guy told you on YouTube, guys, that's a very risky bet. It's a very risky bet. You're not here to be a degenerate gambler trying to make maybe some money. That's not what trading is, okay? It's finance. You need to know what you're doing. You need to be prepared, and you need to know that the approach you're having will beat systematically on the long term S&P. Otherwise, you're better off investing, okay? Because trading is very risky, and there are strategies. As a retailer, you have one advantage. You're small. You don't have huge capitals to pour in the market, okay? That's why 8% a year is the benchmark, because huge institutional investors pay a lot of money to trade because of transaction costs, because they're so big. Because you're small, though, you can take advantage of edges that institutional trader cannot take advantage of because of their sheer size. So you're small enough to milk a little bit of money out of this huge breast of financial markets, but in order to be able to do that, you need to be prepared, you need to be tough, you need to be resilient, and if you manage to do that with strategies like the opening range breakout, or with post-earnings announcement drift, or with systematic premium harvesting, all this stuff that is a structural edge, you can have a profit factor, you can have a performance better than buying and holding. You can. There's a small window of chance for all of us retail traders to succeed. But it's not going to be probably in the way you're doing it now. So you need to study more, you need to get prepared, you need to look for information, you need to look at every single episode in Chart Fanatics and Chart Academy, because finally we have a place where not just random gurus go, but people that have actual knowledge. And so thanks to people like Riz, you can have access to the best education in the world. So you should go through that, specifically, vet who you're learning from, and let's fucking go.
I paid him to say that. Yeah.
Appreciate it.
Thank you, Andrea. It's a pleasure. Thank you for being with us today, and keeping it real always. I think that's so important in the industry. And well, everyone, we're moving on to our next one.
Thank you very much.
Before we go on to our futures panel, thank you, Andrea.
Thank you very much. Bye, guys.
So now we have 2 traders joining us. Yeah, round of applause again. So now we're moving on to, of course, some of the 2 of one of the best prop firm traders in the industry. 5 million in payouts for one, trading from his phone, as you know already, and 3 million plus for the other. $1 million this year alone, trading props and live accounts. It's, of course, Okala and trader Yush. And they're back. They're going to get sick of our faces, They are. They're going to get sick of our faces. But next up after this, we have the Futures Prop CEO panel, and that should be interesting as well. But guys, Thank you for being back here on the stage. This should be interesting because we have different perspectives and two different styles of trading as well, but very similar results, which is incredible, actually. Maybe we can start there. Of how do you overcome, within your journey, especially when you're up and coming, stopping yourself from going from strategy to strategy, stopping yourself from looking elsewhere all the time of, oh, this person's doing this person's doing that. Oh, they seem to have results. Let me try that. How did you sort of start to get tunnel vision and just focus on yourself? We'll start with Akala and then we'll move over.
That's a really good question, and a lot of people suffer from that exact thing. I always bring up the point that everybody kind of has, the failure rate's 98%, whatever. Okay, yes, it is. But why is it like that? Why? It's because most people, when they fail at something, they stop doing it. And they go to the next thing, and they go to the next, and they fail that, and they go to the next. If you just stick to one thing, whether it's order flow, whether it's ICT, whether it's 80-20, whether it's this, that, or the other, if you just stick to that and you learn your own way, learn it, adapt it to your style, adapt it to your personality, the chances are much higher that you'll succeed because you'll find those caveats. So to answer your question, Riz, when something started clicking for me and working, I stuck to it and I adapted from that point on.
I like that. How about yourself, Yash? Oh, we got an applause. Thank you.
For me, I wasn't on social media, right? So
You weren't.
I weren't. No social media.
One of the only traders out there.
So I just traded with two other friends that I started trading together with in options, and we would just talk back and forth. We all trade similar, so we would just get feedback from each other. And again, it was just a small 3 of us in Discord. We had our numbers as well, but no social media. Didn't have an X account, no Instagram, nothing like that. I don't really care what other people are doing. I'm just in my own kind of path, trying to provide for my family, as we talked about earlier, right? Financial freedom. So my advice is don't look at what other people are doing. You don't know the struggles they've been through. And because not many people talk about the failures online too. They just show the wins, right? You're gonna fail, right? No strategy is perfect. The important thing is getting that data, really going through the data and seeing what you can improve on. There's always things you can improve on. Even right now, sitting here, I made all this money. It doesn't matter. I think I can continue to get better and refine my system, and I'm not perfect every day, right? And you can't be. There's so much uncertainty in the markets. There's no such thing as winning every single day. So there will be losing days, but it's all about how do you cap that downside, right? When do you stop trading so it becomes worse and you go on tilt cycle, right? That's so common in trading, the tilt cycle. So have parameters being like, okay, once I have 2 or 3 losing trades, this is when my emotions take over and start to go on tilt. So have something in your rules or hardwired, be like, okay, I'm gonna stop. This is when I'm gonna stop trading. And that's what I did. I made mistakes, reviewed my data, and over time I got confident in it, and I saw long term, if I respect my rules, cap my downside, I'll be successful.
Yeah, if you can hold it closer to you.
Sorry, my bad.
Can everyone hear okay, or should we? Yeah? Okay, good. What I was gonna say off the back of that, one interesting thing when it comes to prop firms, especially because there's so many now, is that I think a lot of traders probably find themselves buying 5 accounts at that firm, 3 accounts over here, 20 over here. What was the reality like, though, when you were still sort of finding your feet when it came to prop firms? Were you doing that as well, aggressively buying challenges, or what did that look like for you?
I can start. Back then, back in 2020, late 2021, 2022, there was only 2 options. It was Apex and Top Step, and Top Step back then had the, I don't know if there's anybody from Top Step here, but Top Step had the worst, program compared to Apex. But back then, you only had 2 options. And not only that, but they were cheap. The accounts were cheap. So you had the cost of failure was much less than it is now.
Okay.
So back then, you could buy that $20 account, you could pass it, pay the fee, and then you would get the $3,000 from a 100K or whatever. So you could start with one and then go from there, right? So how I personally started is I started with one 100K Apex account, maybe failed it 3 times, passed it, and then I got paid. And that return let me buy more accounts and more accounts. What I see most often, what's happening with new traders is they're not letting themselves have enough room to fail. Because you as a trader, as a new trader, maybe as a break-even trader, right? You need room to fail. Your lifeline is your capital, is your money. Okay, if you don't have money, you can't continue. So what you should do is give yourself enough time to fail, learn, and adapt. Okay, how you do that is you don't blow 20 sets of $100 accounts over and over and over again. Right? You buy one, you get a return. You buy two, you get a return. And you keep going from there. Right? So it's like an infinite return loop. Once you get to a point where you can continuously extract money from the market, that is when your linear curve starts going exponential like this. So you don't want to start with buying 20 accounts, because then your lifeline gets shrunk to nothing.
Yeah, as Emil said, like when I started, there were only 2 firms around. I was primarily doing Apex at the time as well, but I didn't do what he did. That's the way to go.
What did you do?
I was buying 10 accounts at a time, and they were cheap.
Yeah.
Now, someone entering this space now, as we talked about in our Words of Wisdom podcast back in February, you have to really build a skill to trade live. The accounts are more expensive. You can't churn accounts as you could in years past when they were like $30 accounts. Now you're paying $100 for a 50K account. So the price has significantly increased. So you got to really take it seriously. And at the end of the day, the goal of prop firms is to build a strategy, get the confidence to trade real money. Long-term success will come from you learning a strategy, low-cost entry with props, and taking that to personal. And that was my mission statement, right? When I did the pod, and I was like, okay, this is what I'm going to do this year. Sitting here now, it's crazy.
Yeah.
In just 4 months, achieving it, and I want to continue to push that mission forward online, because right now, what you see online is like, hey, churn and burn. This is how you make sim farming. Unfortunately, if you keep doing that in the next few months, the ROI is not there anymore, unfortunately. Everyone is going to start moving traders live quicker. It's just a space. It's the name of the game, right? And spaces change all the time. It's just not the prop industry. Every industry you go look at, there's all constant change. So you have to adapt to the change or you're going to get left behind, right? And right now the change is build a skill, get those payouts, be consistent, and learn how to trade real money.
Staying with you, Yosh, there on that same topic, something we've highlighted a few times today is that transition to live capital, right? Even if you've been successful prop firm traders, such as both of you have done, but you said it, like you said earlier this year on the Words of Wisdom podcast, you said that that this is going to happen. Like there'll be a transition to live a lot more, which is for some traders feel like a negative, but it's a positive as well. But how did you do that though? Because a lot of traders, as we mentioned earlier, is like that's a big hurdle. That change, going from what they're used to with the sim accounts to then over to live capital, even if it's at a prop firm, because I know you've done both, right? You've traded live with props, but also your own live capital. How did you make that transition? Were there hurdles? Were there things you had to adjust and get used to? Or what did that look like for you?
Yeah, definitely. So the biggest thing is props give you small amount of drawdown and huge leverage, right? It's like they're dangling all that leverage in front of you saying, hey, do it. You shouldn't do it. It's not. It's just there, but they have the ability. But you should scale the account slowly, and then if you see a really good trade, you have a good buffer built. That's how you do it. That's how all my big days, even in a live prop, I built up a buffer. I saw a really good setup, and that's when I had like a 50K day on a live account, live prop accounts, 5 of them. So you have the same opportunities. You can get 5 live prop accounts. It's just building up that buffer, the profit buffer, to be able to do that. Right? A lot of people want to stay in sim because, well, they don't believe they have a strategy. Well, like I say, it was a hot take I said, you don't have a working strategy if you trade Asia because you can't slap 20 contracts in Asia. There's not liquidity there, at least on NQ and ES, where you get filled at the same price in the real markets, right? Mm-hmm. And maybe that's education that we as creators have to provide out there between sim and live, the liquidity in Asia, London, compared to New York, right? That's a question, right, for props and creators in the space. But I think with the way space is going, it's really important to kind of take it much slower, not churn as many accounts, because you're not going to get as many sim payouts. The trader is going to feel like, hey, this is not what was promised to me. But at the end of the day, the goal is to go live. No matter what anyone says, I think we got away from that mission statement the past few years, and now we're kind of going back to it. But at the end of the day, if you want to have success in trading, we're not here to play a game, right? We want to actually build a skill, convert that into a real skill, and trade our own money eventually And that's where you get real growth.
How about yourself, Ricardo? Making that transition, what was it like for you?
You know, I'll disagree a little bit with Yash. For me
Oh, I like it.
personally,
This is good.
for me personally, he said the goal is to go live. For me personally, the goal is to make money. That's the goal. Now, it just so happens that if you make too much money now in prop firms, they send you live no matter what. Okay, that's just something that you're going to have to face. If you get too good at making fake money, you now have to make real money for the firm. Okay, great. The transition, what you have to do is, this is where I agree with Yash, is that you must size down. Because, you know, how many guys here on a 50K account are risking 3 minis? I mean, just be honest. You don't have to raise your hand. I mean,
Someone did.
well, props to you, sir. You know, what you should be doing and what is the most consistent way in live capital is take that same drawdown and divide it by your live accounts. So take those 3 minis, say you have 3 accounts, do 1 mini per account. The same risk, right, as far as profit goes, but divided across accounts. And that way you get to keep your accounts, you scale them up, and then eventually once you have buffer, you know, you can add more contracts, etc.
Let's have 2 very specific questions for you both to wrap up. So what helped you overcome your early phases of losses? Because at the end of the day, one of the biggest hurdles early on, before finding consistency, is being able to handle your losses, get through that stage of being a boom and bust trader. That's one of the hardest stages. There's a reason why most people don't come out of it. It's because of how hard that and difficult that is to handle losses consistently before finding your feet. Like, what was it like for you individually, like in your journey? What was that like for you being that boom and bust trader, and how did you overcome it? What were the things that helped you?
You know what? It's for me. I'll just be honest. A lot of people they will be in the bust phase, and then they'll have a sort of a boom, and at that point they quit their jobs, right? They quit their jobs because they don't, you know, they don't want to do this 9-to-5 grind anymore. They're over it. They think they can make it in trading. They quit their jobs. Until you get that click where it's a constant and consistent, and you have a track record of I would say 7 to 8 months, really. 7 to 8 months of consistent profitability, not day to day, but month to month. That's when you should start considering it. Until then, how you kind of get through the bust cycles is you have a job. I mean, and that's for me, that's what it was, is you know, I had a job and it provided for myself, for my family, for my wife and me, and until I was able to get to that constant, consistent profitability, that's what it took. And as traders, you have to have a lifeline, like I said, and the lifeline is money. So you must make money one way or the other. You can't just be losing money all the time.
Slow it down. You know, slow it down. Don't be so quick. Because I've heard the horror stories as well. It's like so many people. I've met people where, you know, they had 1 or 2 payouts and they're like, oh, I quit my job. And, you know, you'd think it's crazy, and most people would agree that's, you know, sounds crazy, but people do it all the time. Yosh, how about yourself?
Yeah, as you mentioned, slow it down, and that's what I was going to say. Take a break. If you're going through a bust cycle, you need to take a break, because if you continue to trade, you're just going to trade on emotions and cause you to lose more money. And I really believe that if you can stick around long enough, you will figure it out. But in order to stick around long enough, you need to have money to do it. And I've been through enough boom and bust cycle, biggest one being where I made 300K, gave it back. I took 1 month off, just no trading. And this was in options, not futures, but it happened. I took a break, no looking at charts. Obviously, I wanted to trade, but I knew that if I continued to trade, look at markets, I was just going to put more money in, wire more money in, I was going to lose it. So I think traders, when they're going through this bust cycle, really step away from the markets and just focus on anything other than the markets. Markets will always be around. They will be around. Go work a job, as Emil said, rack up savings, right? And that's what a lot of people do is they trade to make money. I don't think you should do that. Just have some savings, right, before you come to trading. So it takes pressure away. Anytime I've tried to trade to make money, that's when I've lost money. I don't trade to make money now. I truly love the game. Look, I'm trading here. I've been traveling the world with my wife for the past 10 days. I'm still trading because I just love this shit, right? And the money is just an add-on. It shows, I guess, oh, okay, this guy has this success because he's made money. But to me, even when I lose, I'm happy, right? And people can see me like lose when I'm streaming. It's like, okay, whatever, we'll come back tomorrow. We'll see with opportunities, right? So it's not, I don't like the perception that it should be measured on how much money you make, wins and losses. It's about longevity in the game. A lot of traders, they make a lot of money, but before they leave, they give everything away. So what's the point? You had success, but you gave it away. It's about how you exit, how you retire, right? And I want to retire at the top, so that's why I kind of protect myself when I said, I don't know if I will ever be able to scale to like 2-3 million in a year, because I'm pretty happy, content.
Well, you've both been absolutely crushing it, and we thank you for not only the strategy breakdown, but even right now. Guys, make sure obviously you follow these two guys. Absolutely incredible. They share so much value for free, so transparent, wins, losses, you name it, and that's very rare in this industry. And that's why I've had the honor of hosting you both on the channels, and we hope to do more in the future. But a round of applause for both Akala and Yush. We'll be taking like a 5-10 minute break whilst they set up the final panel. It's an hour-long panel. It's a bit crazy, right? But we've got the CEOs, the founders of the biggest futures firms in the industry. So stick around, stretch, get some fresh air, and then come back, and we'll finish off the day. Okay, guys, is the mic on? We're good to go. We're on the final panel. Oh, well, this is, I guess, the first of this size of a panel, but Prop Firm Expo, it wouldn't be right to finish without speaking to the leaders, the pioneers, the top of the top, especially within the futures industry. So we have a full panel of CEOs and founders of the top prop firms. I have to try and remember each one of the names as they come on, but massive round of applause for them. We're starting off with George from Alpha Futures. We have Daryl from Apex Trader Funding, Dan from Ninja Trader. That's it. We have AJ from Lucid and Brett from Traderify. AJ's the only one who dressed the part.
We're LARPing.
Well, as all of you guys may know, I've been up here for many, many hours, so I'm going to need your help today to navigate this conversation in this panel. But where can we begin? Where do you think we should begin? I think, one big thing that's changed, if we were doing this, let's say, a few years ago, one probably wouldn't be able to do it because there wouldn't be that many traders probably, and especially there wouldn't be that many firms. So, what are your thoughts around the growth of the industry that we're seeing at the moment? Do you see it as all positive, or is there some things that are maybe friction points as firms, and you have to be careful of, or things that you're aware of that maybe the audience wouldn't know about? I don't know where to begin. Maybe we'll start closest, and then we'll start mixing it up.
Yeah, I mean, we was just saying that the space over the past 5 years, year after year, it evolves. More and more competitors enter the market. Everyone starts improving their systems, their infrastructure, the plans that they bring out, new ways to market and grow. And as itself, like the event today shows the growth of the market. And then as competitors, everyone's pushing each other to, improve. If there was less competitors, you wouldn't be as inclined as a firm to build as fast or change as fast or react as fast. So the competition just breeds efficiency in the market, and it's turning into an amazing industry that's still very much in its infancy.
Yeah. Daryl, you're probably one of the founding fathers here today. So for you, you've seen everyone one by one come along. So what are your thoughts?
Yeah, I think it's absolutely fantastic that we have competition now. When I started off, there was basically 2 companies. And I mean, there was a couple of small ones, but 2 that were, decent size. And there wasn't as much push and edge and everything else. And now I think we've come out where there's some top companies that have really done it right. And it brings integrity to the industry because it's not just one company. I mean, a long time ago, I owned a telecom company. I was telling this to one of the guys. I had a telecom company, and it was unlimited long distance. It's coast to coast. And it was the first coast to coast unlimited long distance company in the country. And the hardest pitch we had was people were like, is this real? Am I going to get a bill for 10 cents a minute, at the end of the month? And but then MCI Neighborhood came out and stuff like that, and people were like, oh, wow, you are real. And our company boomed. And we've seen the same thing. As other companies have come along and done well, like we've been able to grow with that as well because it's brought integrity to the industry. People are like, okay, prop firm trading is a real thing. It is a path. It is a way that I can learn how to trade. I can enter the market in a lot safer way than, blowing $25,000 in a day, And unless you reset all day long. And then, at the same time, there's been a lot of people who think it's an easy business. And I think everyone up here would agree it's not near as easy as it looks. And so they've come into the industry, and they have a saying, come take advantage of me, and they don't last very long.
Yeah.
But I think we've all worked together, competitively, but still together to guide our rules to be like, okay, how do we make this what would happen in a live account? I know that's like our guiding principle at Apex is to go, the rules that we have, would they help you if you're a live trader? Is this something you should be following as a live trader? And if that's the case, then that's a good rule. If it's something that just hurts you, then it's there for no good reason whatsoever. So, but yeah, definitely, competition breeds ingenuity, and it's making the space. I mean, now we have these, expos full of 2,000 people, and we're all sweating up here. So
I saw your tweet earlier, Brett.
Prop Sweat Expo.
Yeah, that's Dan, unique position. Obviously, you've worked within the prop space for a very long time, but now over at Ninja Trader, which everyone as a platform is shared across all the props. Now, what are your insights when you see the growth, you see the changes and everything?
I mean, Daryl, you alluded to it there. I mean, the growth of live has been tremendous. We look at it from the perspective of prop has created this incredible top of funnel. It's allowed traders from across the world, new asset classes to come into the industry, get in at a reasonable opportunity, learn risk management skills. They develop over time. They can then work through the systems. You guys all are pushing people into live accounts, which obviously us as a brokerage firm at the core of what we do, we love seeing that. You mentioned it, the CME, that's the CME's big, the big thing that they're talking about right now is prop getting traders into live, and we're seeing that across the board. I think, over my years in this industry, it's astounding to see the growth that has happened over the years and the impacts that have caused it. We saw it through COVID in 2020. Anyone that was here in 2020, we saw this huge surge of people looking for an opportunity, whether it was young people, which was really the shift, the younger demographics, which we've seen here today, and props to everyone that's made it out and bared through the lines and the lack of AC in this country.
And the space is going to keep on growing. I mean, I think everyone here, futures feels like their whole world, but it's still like a niche, product. Like options and stocks are still so much bigger. Mm-hmm. So there's still a lot of meat on the bone for this space to grow and at an exponential rate as well.
These guys said pretty much it all, yeah. So it's tough to go last. But no, I think rising tide lifts all ships. As long as there's reputable firms, honest firms out there, like that's pretty much what's going to drive the market. I think this prop space is still early. I think we estimate there's probably like 1 million or so traders within it, which sounds like a big number, but it's relatively small when you think of how many people trade. So there's a lot of new products that are going to be coming out to the future space that I think will get a lot of people in from those options, stocks, et cetera, into this space. And any way that either of us can market the same way, differently, et cetera, if you see our firm, one of their firms, you're eventually going to see all of us, most likely, right? So, yeah.
One of the things I wanted to mention is one of the vendors, I won't say what vendor it is, but they asked what the growth they needed to expect at the servers, I'm like, we're going to go to 100,000 in the next year. And it took us 2 years to get there. But they're like, there's not 100,000 traders. Like, they didn't see it. Now we have like 400,000 traders. So, I mean, I think even the futures firms didn't expect the growth that we've seen in the prop industry, and it took a lot of technology upgrades to make it happen.
Well, this was something I was going to ask about. Like, how do you guys operate within a space that is still relatively new? It doesn't feel like it for a lot of us, but for some it will be. But in terms of finance, prop firms, as they are, is a relatively new space. And then how do you balance, one, being able to innovate while essentially creating the rules and creating what this industry looks like, but also how do you balance that, the corporate field to then the more creative marketing strategies? We'll start on this end of the room for this, but how do you do this balance? Because obviously you want to innovate and you want to be competitive and you want to try new things, but then with that comes risk because it's not been done before. So how do you find that balance? How do you go about doing the things that you guys do on a day-to-day basis?
Yeah, I think a lot of it comes down to the fact that like props are obviously trading companies, fintech, but it's also really data companies, right? You have to analyze the data, see the different plans that are out there. When you're a new firm coming on the space, when we started, we had something to kind of base off of, looking at, Apex, some other firms that were out there at the time. There wasn't as many, but kind of just starting out with things that aren't too aggressive is important, and kind of putting the brakes on it a little bit, easing up a little bit, making it a little easier for certain traders to hit goals, et cetera, because this is a give and take type of business, right? I mean, you're putting up front for most of these evals, sub $100, payouts are 20x that for the most part, right? On a single account. Sure, it might take you a couple tries or more, but that is the reality of it. So looking at the data, being proactive rather than reactive, and seeing where you'll possibly be is important. And we have different ways to gauge that and pull that. Obviously, price, rules, etc. But again, not launching too aggressive is very important. And I think that's why we saw even large capital-backed firms unfortunately fall down, and that's not what any of us want to see. So it's important that any new plan that anyone comes out with, et cetera, is kind of backed by existing data. And I think most of us now have a good amount of data points to be able to build a new plan and gauge the effectiveness before it launches. But adjusting quick is very important.
Definitely.
Yeah, I don't think we're balancing the corporate side of that scale so well at Lucid, but it's working out regardless. I think for us, it's about there are so many different types of traders, and there are so many different ways that you can put together a plan for them. And so you see what people are doing, you find a space, you find something it's going to work. You roll it out, and if you find a wiggle room, you ease it back. Maybe you lower the price, maybe you take the rules down a little bit. As you collect information, it gives you a lot more wiggle room because, like Brett said, it's all about data. I think something that's super interesting that's happening in this space, I'm seeing it a lot online, is I think a lot of traders feel that the deals that they were getting, the upside that they were getting from firms about 4 or 5 years ago was so much better. I think there's kind of a sentiment that the glory days are behind them or behind all of us. I don't necessarily think that's true. I think where that comes from is that as the space grows and as more people get involved, Daryl is the OG of this. He understands better than everyone is like the scamming, the scheming. It is a lot more rampant than I definitely expected when we came into this. We had heard about this since like 2022. It's like, all right, sure, there's some bad actors, but then when you're in it, you're like, oh no, there's a lot of it. And so I think that's why live is such a hot topic for a couple of reasons. One, you can't really scam your way out of a live account. So it's definitely helpful on the risk management side for us. But it's also, I think the psychological dynamic there, it's so different for people to, there's this clear line from sim and live where I think traders feel that it's a completely different way to trade when it's for everyone up here, the live account's always going to be looser on rules. But maybe it's just they're intimidated about it. But I think one of the biggest things that we have to do is help navigate that transition, because as the space grows, the number of people that know how to game things and know how to scam things, that's going to grow. And we can't pay millions of dollars out of sim payouts forever. It can't be done. So as we all kind of navigate that space and navigate that transition, making sure that we handle the communication with traders on that topic in an effective manner, I think that's going to be the key for the next phase, because you can make as much money in live off of any of our plans, and no one's going to care if you get $1 billion payout from us if you made it from live markets. Obviously, that's not, the first $1 billion live payout we'll all celebrate that. But I think there's just that navigating that transition is going to be a key for both us and the traders, because that dynamic has to be fleshed out.
Definitely.
I think I have a little different perspective sitting on the platform side, but the way we look at it is we have a unique view. We get to see everyone's growth. We get to see the users coming into the space from the platform side, with all the firms coming through. And the big thing that we focus on right now is, as this growth continues to come in, we want to ensure that there's the reliability and stability behind the platform, right? And so we invest heavily across our whole back-end system so that traders, when they sit down to trade, they can trust that the platform's going to work for them. And that way, for us, we can know our partners are going to be in the best position to be able to provide what the traders are looking for. I understand when the platform has an issue, how it impacts each and every one of our partners. And so at NinjaTrader, we're heavily focused and heavily investing into the reliability and stability of that robust back end, so that the traders are getting the closest thing they can through sim to reality, and then that transition to live, that's a smoother transition, because anyone who's ever traded sim and has gone to live, there's a little bit of change from an order execution, the fills, how everything operates, even just the mental and the psychological change that you go through in the trading. I know for myself, when I first started trading live, it was really hard. I was writing on a piece of paper, and then they threw me into a pit and said, all right, start filling orders, and I'm yelling with guys that are twice my age. It was frightening. So I get the psychological change, and so that's really what we focus on, is providing this environment for traders to trust, so that they know when they sit down to trade that the platforms are going to be there to support them, and then we're there to support each one of our partners, so that they have the best system, the best tools to take to the trader.
And I definitely say Ninja is coming a long way Because we just had to build up to the size.
They hired a new guy.
Oh yeah, did they? But no, I've come a long way, and it's been great. We've been working with your team all week, so to onboard live traders. I think we got 800 contracts in this week, and then like 300 got their verification done, and 100 are going live next week. So we plan on putting on about 100 to 200 live every single week for I don't know how long, and
forever.
Yeah, exactly. So we got a big pipeline. But I think from a corporate perspective, it's what is the long-term, where's this industry going to be in 5 years? You know, and we have to look at, okay, it's going to be a lot more live heavy. The regulation is going to demand it. It already is starting to demand it. But at the same time, how do we help traders get there? You know, and do it comfortably. I mean, the whole goal of prop firm trading to begin with was help traders that don't have money get money to be able to go into trading. You know, but it wasn't necessarily to go into live trading. And now that's become a big, you know, a force thing. You literally, you know, said you can't pay millions of dollars out of fees forever. And, you know, we still have big payouts. We have six-figure payouts constantly happening, but that doesn't, you know, those traders are going to be moving to live, right? And so we got to help them be successful in that process. And so we have to use a lot of data. I was very against AI. I was just like, oh, it's going to take over the world. But like I've had to embrace it because there's no way to analyze data on 20,000, 50,000, 100,000 traders without having those tools. And by analyzing that data, we can see, okay, how are they trading? What would work for them? What would be a good path? What would be a program that's, you know, achievable and set them up for the best success long term? And as long as we can set you up for long-term success, and I think we're doing our job.
Yeah, I mean, it's been mentioned a lot, and I think as we're all collectively moving, the whole industry is moving towards more pushing traders live. One is the next step and next progression for the sim props to progress into live programs. Also, as you mentioned, like the regulators are, it's not, you know, can you, it's more like, are you, like you need to. And I think as an industry and us all together pushing our live programs, innovating it, making it more, one, easy and comfortable for traders to transition, but also making it more collaborative with the traders so that it's, like if it was just one of us up here running a live program and no one else did, then that firm would stick out like a sore thumb and maybe be unattractive because once they make a certain amount, only that firm moves them live, and so maybe people start avoiding that firm. But as a collective, all top 5, top 10 firms all creating these live programs and innovating their live programs, it becomes the norm in the space. So whilst, yes, there may be some friction over the next, you know, the past few months and the next 6 months or 12 months, that will become much less frictionless and a lot more collaborative, and the traders will become used to it and hopefully enjoy it and like it, and some do, some won't, and everyone's slightly different. But yeah, whether we are all doing it intentionally, helping each other out, or not, you know, because we're all doing the same thing at the same time, as a collective, it's going to make it a lot easier for the industry to transition towards that next step. And as a business itself, you know, because it is such a new industry, and you know, we're all 2, 3, 4, 5 years old, some longer. It takes a while to innovate and grow, and you have to build your systems, your teams. The corporate side is more, you know, your senior management team, the support teams. Like when you are dealing with hundreds of thousands of traders, this is a market of instant feedback. If there's an issue, if there's something traders don't like, you hear about it straight away, and as you should, and they expect to fix straight away, and as they should. But as companies trying to build out support teams and systems that can handle that load and that many clients, and give them that 5-star service all the time, 24/7, that's a hard part for the prop firm to build out and make efficient and be able to grow as the industry grows. You have to keep continually growing those systems, the teams, being able to manage that growth efficiently, which I think everyone does a fantastic job on. And then it's the next evolution. You know, it's now firms moving more, focusing on live programs, and it's that same, you know, finding what works, what doesn't work. As firms all find their feet, maybe they have, maybe they're still got more ideas to come. But over the next 12 months, I think the live programs will be something that traders are, you know, excited for. And yeah.
Well, it's an interesting topic. I've talked about live programs a lot, and it seems to be the talk of the town quite over recent months, especially more recently. I'd love to ask the audience, like, what are your sentiments? Sorry to do this to you guys, I apologize. But, like, do you consider, put your hand up if you consider live as like a hindrance, like you don't want to move live as a prop trader? Everyone wants to move live. It's okay.
There should be more hands.
Yeah, I know.
Don't be scared. Don't be scared.
I thought it was going to be way more hands.
I
There's
know, yeah,
4
it's
or
not
5.
bad. Well, I'd love this opportunity to, like, what are your, as a firm, what is your mindset around moving live? You already mentioned it's almost an integral part and almost necessary part. It's not maybe necessary that it's something you want to do, but it's just the way the business is shaping. As we've talked about, it's a very new business, and so these changes are going to take place. But as a firm, what is your message to the audience who are here in attendance and watching the live stream right now, in terms of directly to them, in terms of your mindset around the whole live program? And as you say, things are going to change, no doubt, as months go on.
Well, let me jump in as a non-firm, and I'll help you guys out here a little bit, right? But at the core of what prop trading really is it's, you alluded to it, right? It's a path to live trading. When this industry started, that was what this concept was. There was no simulated funding at that point. You passed, you went straight into a live account, and then the industry innovation continues to evolve. The opportunities changed, simulated funding came in. But truly, at the core of it, everyone should be excited to get the opportunity to go live. You get to see your order enter into the queue. That queue is seen across the globe. That order, you really start to think about it, that order travels all the way to the western burbs of Chicago, to the CME servers in Aurora, Illinois. You're now actively engaging in the largest centralized exchange in the world. Like, to me, that's what's exciting about getting the opportunity to go live. That's really what everyone should be striving for, in my personal opinion. Take it or leave it for that. But that's one of the biggest opportunities that you get with working with each of these firms, is you have an opportunity to really become that professional trader that you've always dreamt of becoming. And that's a skill set you can carry on for years to come. I mean, you see people doing this for their entire careers. I grew up doing this. I get to see people do it all the time. So really hone into that and understand how exciting it is to be able to execute those live orders. That to me is really what it comes down to. It's the opportunity to take that next step.
Yeah, I'd say it's the pinnacle of trading. Your goal as a trader, you became a trader to make money, to get financial independence, to have time to do the things you want to do. And if you become a live trader and you can handle live trading in a live account and become consistently profitable, you've earned financial independence for life. And you've earned a way to make more money than just about any job out there. And so if you look at it that way as like, okay, my goal is to make money long-term consistently and be able to live on it, a prop firm is definitely just a tool to get you there. You know, eventually you're going to go, I'm making so much money, like why am I giving 10, 15, 20% to a firm? I might as well just take my own money and go live, and that's fine, you know. But you don't have total independence if you're relying upon working a system that's not real in live accounts, because things are going to change. You don't have control over that. Like the industry is constantly changing and expanding and adapting to different markets, different ways that people trade. And as a live trader, you now have gained financial independence. And if you see it that way, then it's a good thing. If you see it as a hindrance of, well, I just want to stay in the simulator forever, and I never want to get in a plane and actually fly one, well, I mean, grow up, you know? It's like nobody who wants to stay in the simulator that becomes a pilot. They actually want to become a pilot. They want to fly a plane. They're gonna have people who are relying upon them. They're gonna, so let's do that the safest way possible. And the cool thing about prop firm trading with live accounts is you're not risking your savings, your retirement, your kids' education. You're still getting to trade live, risking other people's money. And that's a great step towards you to be able to eventually one day just risk your own money. But it's a nice progressive step. I mean, I wish this would have existed when I started trading. You know, I mean, I had to fund accounts, blow accounts, refund accounts. You know, there was no reset button. There was, put 20,000 more in, And so there was no like $19, $20, $50 resets. And so this is a great opportunity to get you to that ultimate goal.
I mean, Daryl is the OG, and he's been here for a lot longer than I have. And I remember when I first started trading Apex accounts, it's because I was blowing money in live from my actual brokerage account. Going to the bank and in shame and wiring money with another 10K. Never felt good. So when I found out that I could slow that while I was learning, slow that loss of funds by trading simulated capital, that was the opportunity. It's like I can lose money slower by just paying fees instead of losing my actual cash. And that was the dynamic. And I think when the space was smaller, it was just for people that were already trading futures to just have a playing ground that costs them less while they kind of cut their teeth. And I think as time has gone on, it's shifted from I'm going to lose money slower while I learn into, okay, I'm going to look at all these firms and I'm going to calculate the maximum ROI that I can get by not really trading, but just accomplishing the objectives, right? And there's nothing wrong with that inherently, right? These are people that are they want to make money to improve their lives through, getting more financial freedom. But as that dynamic the approach of traders has changed in how they interact with our firms, that's what is bringing the upside to the traders down, right? Like everyone said here, it's about data. As we've seen behavior shift, the data shifts, and the upside comes down in order for us to sustainably run our businesses. I mean, I think that, when you have like a rule change or a price increase, people are like, oh, like it's the CEOs are they're trying to screw me over. They want to fatten their margins. I mean, there has to be margin for us to keep paying people out. So, I mean, you don't want our margins to be too fat, but like you don't want us to be running at a loss either. So I think it's, everyone up here would love to have a cheap, no rules account with unlimited payout caps because that's what sells. We would all be running the exact same plan if we could pull that off. But if the dynamic is about just extracting as much as possible and then trying to avoid live at all costs, that hurts everyone, right? That's the firm and the trader. So it's just about, when we say we're reacting to data, it's trader behavior and how they interact with our businesses. And live is just part of that because if we see someone that's making tens of thousands of dollars consistently in sim, they've got to move to live for the sake of the community, honestly.
What are your thoughts, bro?
Yeah, we look at sim kind of as the training or like internship that you'd have when you first start working somewhere, and then it turns into the professional job that you want to later when you graduate to live. Talking about the reset button before prop, that would be the deposit button. That's pretty much where everyone came from. And before COVID, and when some of the bigger firms started to step in, obviously there was only one or two. Now we're the big 5, 6 or so, and there's obviously multiple different firms in FX and futures that have opened up this space. But before that, it was deposit to your Robinhood account, probably full port, and see when you got to deposit again the next day or the end of the week. And this is really a new tool to get people in with guardrails, with rules to be training you like you're at a real job to get that promotion into the live account. And even past that, and I think where a lot of firms are going to move to is brokerage. So like we just launched Slay Markets, which is a brokerage with NinjaTrader. And you'll be able to take a payout that you get with us, split some of that or all of it into your own live account. Not a live account with us or under us, like your own account as well. And that's really the goal too, because you want to be able to have the option to trade however you want. Obviously with us, there's a limit. There's still freedom similar to your own live account, but there are still some rules on there as well. Plus in your own, you'd have things like obviously 100% profit split. Nobody's taking your profit from yourself, right? So things like that I think are good for the industry, and maybe we'll see a lot more of that in the next few years as well. As more traders move live, again, they want to push their money that they're taking in payouts to their own live account as well.
Yeah, no, I think the type of trader has changed. The people that are entering the space now versus 5 years ago or 10 years ago has changed because social media and the trading space on social media has evolved drastically. The barrier to entry for new traders has been reduced so drastically by prop firms because you can get into the market for $50, $80, right? As opposed to saving up $500, depositing it into an account, having a bad month, blowing it, you have to go again and again, and the upside isn't as lucrative on a 500 quid deposit than it is on a 50K prop sim account. So that reduction of the barrier to entry for traders has partly fueled the growth that has become this trading space, which has changed. And Ninja can probably attest more than anyone else on the panel the amount of traders that have physical traders that have entered the space has grown drastically. People that are now coming into the space that have never maybe even ever had a deposit account, or they've never started live. Their first trading account is a SimProp account. So that transition to live might be the first time they've ever traded live, as opposed to, you know, a few years ago, maybe they're used to trading on their own broker account, and then they start trading prop. So it's the roles have reversed in that instance. But yeah, I think a path to live, a path to, you know, everyone that's trading. Trading in itself is a lonely, tough, extremely emotional roller coaster of a journey. It's not easy to make. And the goal obviously is, like people have said, financial freedom. But if your goal is to become a professional trader and have a career in trading, and you want to trade for a living all the time, then you have to take a professional mindset approach to trading. It's not something to be gamed forever for 50 years, and you can just game and figure out a way to, because there are ways to, because it is sim, there are ways to game sim props as well. That's why the rules exist in prop. So as a trader, the mindset should be that, you know, my goal is to get live. My goal is to become a professional trader, trade for a living. So it's, I think as a collective, with both the trading audience, the customers, as firms, that collaboration is needed, and it's more of a mindset, I think, that most, if not all, probably share that is their goal, you know. So, yeah.
One thing that you sometimes get a sense of is it's almost like a us versus them sometimes, right? The traders versus the firms. The firms don't want profitable traders. Like, what are your mindsets, right? Is that true? Is there any truth to that? I'll start with AJ there. He's looking at me there.
I love this one because, you know, I think there's a couple things that I think are true. I think intraday trading specifically, not necessarily investing, but intraday trading is very much so a zero-sum game. In order for you to get long, someone else has gotten short. So in order for someone to win in trading, someone else has to lose. So I think that is a dynamic that is at play in live between the person on the offer and the bid and the person that's marketing in. And then in prop, it's that mentality is that people like to milk prop firms, right? We all get milked. That's the phrasing that we use here. We're all 4 cows up here. You know,
sim farmers.
And I get it, right? It's the dynamic is that they understand, like, everyone understands the business model, right? In order for, if every single trader that all of us had all requested a payout, like that model does not work every single day, right? They can do it, everyone can have a good day, but it can't happen over and over and over again. So in order for us to be able to support our model, it's based on the fact that trading is incredibly hard, and some people are going to lose. And I think that's just that is capital markets. There's I'm probably paraphrasing there's a Warren Buffett quote that the purpose of markets is to transfer money from those that are impatient to those that are. So you can't have capital markets without some people not being winners. It's just how it works. Or intraday trading specifically. So I think that's just a dynamic that's present in trading, and it's just like table stakes for the game that we're all playing here, right? It's that money's coming from somewhere. It doesn't, we're not growing it on trees. Maybe Daryl is, but not me. But that's part of the dynamic. And I think when it comes to the firm specifically, nobody, all 4 of us, like I said, we all would love to have the easiest, cheapest accounts with the most upside, because we're selling accounts, but really we're in the service business, right? That's how traders pick firms. They look at the accounts and they look at the experience and the upside and the benefits of each of us. So we need to make sure that we're delivering a really good experience to traders. Otherwise, with all the competition, they'll stop coming. So for us, we don't when I have to do a rule change, we stress about it for a week, because we're trying to figure out how can we soften it? Is there anything else we can do? Because it's bad PR. It hurts our brand. Everything that we do that is anti-trader, tears down some of the hard work that we've all put to build our reputations. So we don't take it lightly. But at the end of the day, we all 4 of us, and maybe Dan too, when he's thinking about starting his own firm, we are just trying to think, how can we deliver the best service that we can while making sure that we make payouts today, tomorrow, and 5 years in the future. And some people are going to lose, though. There's no way around it.
I love making payouts. So I mean, like I said, in our first interview, second interview this week.
Okay.
But our interview earlier today is like my first goal after the first year we paid out 10 million. My number one goal was like, what do you want to accomplish this year? It wasn't how many customers I want to get. It's like I want to pay out 10 times the amount. I have no problem making payouts. I love making payouts, but I got to be profitable or I can't make those payouts. Right? So we have to look at the models have to be there to where we can be profitable enough to make payouts, and that's why some people have to move to live. That's just a natural process. But I mean, no, I love profitable traders. I think it's fantastic. So I've called traders up literally. I remember our first millionaire trader I called up before he was a millionaire. He was a losing trader, but I looked at his trading patterns and I'm like, you're a good trader. You're just trading too big. You're going for it too fast. I was like, if you'll just slow down, you'll make it. And 3 months later, the guy pulled out $1 million. So I would have called him to help him.
Did you regret giving that advice?
No, not at all. So I mean, we've have dozens of millionaires that we've created, and I mean I've had people walk up to me at the Expo. It's been awesome, saying how it's changed their life, and I mean to me that's what it's about. I made Apex Investing to help people know how to trade. I made Apex Trader Funding to give them the ability to enter that market and learn how to do it in a safe manner. I'm making M3 Thrive, which is teaching people, now that I've made money, what do I do with it next? And so it's about helping people and helping them be successful and taking it to that next level.
Yeah, I think AJ said too, like there's a winner and loser on each side in live trading as well. So like on the sim side, like we've all said, we also have to make money too. But trading is a hard game, and giving traders access to tools like journals, any types of AI tools to help you read your analytics, how can I be a better trader tomorrow than I was today, is important. And a lot of us have those tools, and many firms out there are adding those as well. So when you look at, again, going from that path from sim to live, it's about, hey, I failed the account, but what did I learn? What was the experience? The experience was hopefully better, and you learned something more than if you put in your own capital yourself, which probably would have been much more. I mean, just to trade one contract of NQ, you got to deposit $1,000. I mean, in Ninja, that's what I think that's the lowest pretty much margin. No, ES is 500, right? Yeah. 1,000. It's 1,000. I know for sure. I'm an NQ junkie. Anyway, so but being able to go in again at a low cost fee is much better than burning through thousands of dollars just trying to figure out the market. So it's really about the experience, like they said, and I think it's not us against you or you against us. It's more of a collaborative effort, but again, we both are in the game to try and make money. We want to have a good experience for you guys as well, but of course we want to have a successful business and be able to keep paying out traders.
Yeah, and this, one can't exist without the other. It can't be, firms can't make no money and pay out traders, and vice versa. As Brett mentioned, it's collaborative. Firms are innovating, building tools that are, education has never been more accessible to trader. The tools that are out there have never been more accessible and helpful for traders or development or their analytics with, the growth of AI and the companies out there that are now, building around AI and developing a system that then is helping traders. It's, as a prop with their traders, it's, we're a service that clients and traders are purchasing, and it's our job, one, to be a profitable firm, but two, deliver the best service with the best tools to make their life easy, their day easy, create it as less friction as possible. That's what will create a happy client, a happy trader, someone that will stick with us and others for years to come, rather than having a poor experience. And it's a collaborative game. It can't be. It's not us against the traders. If we didn't pay out any traders, then we wouldn't have a business. And likewise, if there was no successful traders and there was no traders making, successful returns from props month in, month out, then there would be no success stories. There'd be nothing that traders are looking to see that it is achievable, that traders can achieve what people are posting online. And social media itself is an interesting space, and it's not unique to the prop space. It's celebrities get it. You've got people that love the celebrities and people that hate the celebrities, and same with props. You have clients that love props, some people hate props, and typically it's, you know, what's coined as haters or whatever the word should be for that, but they typically make the most noise. So whether it's about live programs or rule changes or a firm or whatever it might be, you know, just because you see something going around online doesn't mean that that's fact, or that that's true, or that that's the opinion of 100% of people. It just might mean that that's a small group that make a big noise, but that doesn't represent, you know, the other 80% or 90% or whatever the percentage is. So, but again, for traders, there's so much noise in the space that that's another thing that as an end user, as a trader, is learning to navigate, you know, what to listen to, what to look at. You know, companies like Prop Firm Match create an environment that is showcasing reputable firms. They have standards that they hold as to whether they're going to list a firm or not, and whether they're going to delist a firm if they're not meeting those standards. And as they've done, and you know, with this Expo, but just in the industry itself, it's an excellent add-on to the industry. I think it's needed, and it's a huge benefit to the trader. They verify reviews. I think they posted something on their social media about the number of reviews that actually didn't get posted or was deleted because there was not accurate, true, fraudulent documents, or I can't remember how many reviews, but it was in the thousands. But that just shows you that, you know, if 10,000 reviews have gone onto Prop Firm Match and they've not accepted them because of fraudulent documents, that wouldn't get not accepted on Twitter or, you know, wherever. That would blow up. And so it's hard to navigate what's true or not, but Prop Firm Match is one of the spaces.
You're trying to move up rankings.
Verify. Yeah. Well, it's just in general. I mean, there's loads of prop firm review sites, but you know, I'm sitting on the Prop Firm Match stage at the Prop Firm Match Expo, so I can't mention another. But it's a good thing, and that's hard for the trader. Of course, what firm do I pick? Why is that good? Are they true? Is that, you know, is what I'm seeing online correct or not correct? And yeah.
It's hard to have a source of truth in the industry, especially with so much noise. It's mainly over on X. It's only on X. Every other platform seems pretty cool, pretty chill. I want to open up the panel now and give you guys an opportunity, because, you know, technically, I know some firms are slightly newer. Daryl's the true founding father, but this could be the founding fathers 5 years from now in terms of the prop space and the innovation you guys have driven. But, you know, it's quite rare to have you guys in the same place, same time, being able to speak to each other so openly as well. Like, have you guys ever had like a burning question or a question for someone else on the panel, a fellow CEO?
I don't think there's enough time for me to ask Daryl the questions I want to ask him.
I just love your post. I mean, that's...
Thank you. I guess, I definitely have a question for Daryl. What was it like that first moment where you realized that not everyone was just like trading the accounts genuinely? Like, what was the first scam or scheme that you flagged, and how did you guys work through that, like, mentally, internally? Like, did it take, like, just walk us through that? I think that'd be cool to hear about.
Yeah, it shocked me. Because when we first started, I mean, it was, a lot of people came over from Apex Investing, and we had 100,000 users, so bringing those over, they were real traders. Like, I traded in the room with them every day, and so everybody was just trying to trade to be profitable. And then slowly there became a couple people here and there who were like, they're sort of doing some stuff, but it wasn't like widespread. And then all of a sudden, people got the bright idea that, hey, I'll become a social media star and share my coupon code and do this by teaching people how to gamify the system. And an example would be going long in one account, going short in another, and then just continuing to do that over and over and over again. That was probably the first thing, was the hedging, the going two ways. And so having to figure that out, and like, now we have a fraud department. I never, when I started this, thought there'd be a fraud department. But we have to find, like, where people are literally trying to gamify the system. And gamify means, to me, doing something you wouldn't do in a live account. That's all it means. So it doesn't mean like breaking one of our rules or figuring out a way to be profitable. It means what you wouldn't do in a live account, are you doing that in a sim account to be able to pull money out? And that doesn't help the firm. That doesn't help you progress towards becoming a live trader. That doesn't help your long-term goals of becoming financially independent. It's a right now, what can I do to work it? And it just got bigger and bigger and bigger. And so, I mean, now we have people that report back to us. They're like in Discord rooms, and they're like, this is what's going on next, and this is what's going on. And So the rules that we've had to make and enforce, we didn't really have to enforce rules to begin with. So that was a big about Apex for a while there. Like we didn't enforce rules because people weren't really breaking them. And then all of a sudden, whenever it became a social media thing to show how to gamify the system, then we had to start enforcing rules that we had since the beginning. And that obviously wasn't taken well by the people who weren't real traders. And I think that these firms up here are the best firms out there for those who want to be traders. I think those who want to be sim farmers and they want to just gamify the system and they're just trying to pull max profits out without actually learning how to trade, I think we're the worst firms to choose. Go find one that could be around for 3 months and then they'll be out of business and then you'll be good, until the next one comes around. But I mean, that's just being honest. Like we're building our programs, our rules around those who want to be successful traders and not just be gamifying. But yeah, it shocked me, and I can't believe we, to this day, have a fraud department. So we have to watch out for it. So I never saw that as being one of the challenges going into it.
I have a quick question. So I'm fortunate I get to talk to each one of you guys pretty often. Being your partner, we've seen this space shift drastically over the last 3 years, 1 year, 6 months. As we look forward, what are your guys' expectation? And to each one of you guys, what's your expectation between the next 6 and 18 months of how this industry can continue to evolve and innovate? And where is the future of futures trading and futures prop going?
Yeah, I think just keeping each other honest. Like you have some of the most reputable top firms up here. I think partners like yourself, not letting people who are, like Daryl said earlier, going to maybe do aggressive marketing the first month, 2 months, and then they're down the third month. They're gone, right? So keeping the space honest and safe is very important. But for us as firms, I think it's mostly about getting new people in, right? We said that before. If someone knows of one of us, they're most likely going to get an ad or see one of our other firms on social media. That's just how the industry works. That's how social media works. So looking at things outside of trading, going into other niches, partnerships, ambassadors, et cetera, I think that's going to be a big thing to get new people in the space, especially looking international. I don't know how it is for you guys, but I've seen, slow growth from mostly US, at least in the future side for us here. And the international percentage starting to grow. So I think that'll be a big push. New products like single stock futures, something else.
We love that one.
Yes, that might be coming out. And new offerings kind of in the space are going to be really important. And then kind of just how we present ourselves with new tools, new things to give traders, and just increasing the experience 1% better every day, I think is the goal. And going to just open up the path for more people to get in. We said there's about, roughly 1 million or so people in the space. There's a lot more in the world to be introduced to props. So I think that's pretty much what our goal will be to do. Go wider rather than looking at the existing base now.
I think I'm in a slightly different position to most on the panel because I started off launching Alpha Capital Group, which is an FX CFD prop. And then 2 years ago, I then launched Alpha Futures. But the shift in the amount of traders that were once just CFD traders, didn't know what a futures contract was, or had the idea that trading futures was, so different to trading CFDs and that their strategy wasn't convertible. The past 2 years has been enormous growth for people that want to transition from trading CFDs into futures, and particularly in the UK, it's more normal to grow up. Your first account is a CFD account trading on MT5, as opposed to in the US, CFDs are, not a thing. So, in the US, you get to 18, if you want to interested in trading, you start trading futures. But here in the UK, the biggest shift is CFD traders now trading futures, and trading influencers that were once CFD trading influencers are now transitioning to trading futures and then promoting futures. And the growth of futures in the UK alone is huge. And I see it from the Alpha Cap side, where I lose a client from my CFD side. Thankfully, I gain it on my futures side. But I can see the amount of interest that's shifting from CFDs to futures. And it's not that the CFD market is changing. It's just that the futures has grown so drastically. And I think, again, the barrier to entry to trading futures, the amount of education that's out there has shown that it's it's the same contract with a different name. It's the same price. I mean, it's the actual price. It's not a CFD of the price, and that the change isn't that different. And I think over the next 12 to 18 months, the change, I think, for the firm, or particularly for us, is trying to expand our offering. And like you said, you've launched a broker, and everyone's transitioning to live, bringing out new live programs. Bringing out a broker is in the works for us. And over the next 12 months, 18 months, the more that as a firm we build out our infrastructure and the offerings, it will make us more efficient. I'm not necessarily trying to double my business over the next 12 months. I want to build the tools that will, if I stay the exact same size for the next 12 months, but I build out all of the tools that will, make me last a lifetime, and the systems that will support that. The broker is an excellent, path, because you build out, like Dan said, it's such a top of funnel market where the entry to trading futures has become easier. The futures sim props are growing drastically, and eventually they're going to be, and they are now making money from sim props. So, the natural next step is to say, okay, I'm going to have now a live account on top of my sim accounts, and you run both. And as a firm, if we can offer both of those offerings, the broker, a live account, as well as the sim prop, then again, we can, one, service the client in more than one way, and two, build a bigger business that becomes more efficient and ultimately is only going to benefit the end user, the trader, at the end of all of that hard work. So, that's really our focus over the next 12 months.
I'd say not so much our focus, but just the reality. Is like when I got into futures trading, it was like this hidden market for the select few. You had to decode the symbols and all that stuff, and only old guys traded it, and nobody else had access to the market. If you're an outsider, it's like, no. And now, like you said, with social media and everything else, it's become a lot more transparent, and I think it should become a lot more mainstream and a preferred way to trade. I mean, just the margin alone gives you greater leverage than trading in stocks. And now that we can bring stock traders over with single stock futures, so that's going to be exciting.
So exciting.
Somebody's really excited.
I'm amped up for that one.
So, but we'll be able to bring stock traders into futures trading, introduce them into single stocks, and then of course they learn about the indices, the metals. And one of the things I love about futures trading that I think helps traders is futures is the one place you can trade and see the entire world. You can see interest markets, you can see financial markets, you can see ag markets, you can see energy markets, metals markets, indice markets. When stocks, you're trading stocks. Forex, you're trading Forex. But you can trade all of that in futures. And I think that really, I think the most intelligent traders are futures traders, because they can actually see the entire globe in a matter of a dozen charts.
Yeah.
Can't forget lean hogs, by the way.
Lean hogs, for sure. No, I think single stocks futures is seeing how that roll out, and we're going to hit that pretty hard. Seeing how that rollout is received is going to be super interesting, because I think stocks and options traders outnumber futures ones exponentially. And when you hear like the origin stories, a lot of people that are trading futures, they don't get the margin that they want on stocks, and the Greeks with options are too confusing to them. And I think something that's big, especially when you're trading live, when you trade an option, your max risk is the cost of the option. You short with no stop and queue, and you'll ruin your life. So the downside is unlimited if you're trading live. But in a way, using sim prop firms, your downside is the fee, right? So there's, I think, definitely an opportunity to convert some of these options traders, so they get the leverage they don't have to deal with the Greeks, and they get to trade the names that they all know and love. I think that's going to be a huge opportunity. And I think the biggest thing that I think is just important for all of us is, as the space is, I think, very much so in like this transition period about how people interact with firms and how people perceive firms, making sure that we're all putting our best foot forward and making sure that the space is welcoming to people that are looking it up for the first time, right? No one up here benefits if options traders learn about single stock futures and they Google it, and everything that they look online looks like shit. They're gonna be like, I'll just stick in options, which we don't want that. So just making sure that we're all communicating and interacting with the community in a way where we make sure that our space, even though it's currently a niche, like make sure that it, you know, can grow and it's welcoming to everybody. I think that's going to be super important.
Definitely. Guys, I think that wraps us up for time, but just a huge shout out to everyone. Well, one, it's a full ecosystem. Without the traders and everyone attending today, there wouldn't be an event, of course. Without you guys here on stage, you know, not only sponsoring, but doing the leadership that you have done and innovating the way you have done and continuously growing, taking risks, most of all. I think people forget that. There's a lot of risk involved in everything that you do, and there's so much delicacy, and I think sometimes people try and unfairly judge certain decisions when in reality it's a big thing that you guys are doing. There's hundreds of thousands of people that kind of rely on you guys, and you guys doing a phenomenal job. And of course, PropFirm Expo for putting this all together as well. Everyone, massive round of applause to finish off the day. We didn't get too crazy. We didn't get too